Chalo. A very good afternoon to all of you, and we will be doing AS15. We can, there is joint ventures, yes, that needs to be done, but probably we can utilize a longer session that we have for AS15, and then if time permits, do AS27. Otherwise, we can do that separately. So we'll go to AS15. This is on employee benefits. This is there in your volume 1. Now this is one of the new standards again which was introduced. So when we look at AS15, accounting standard 15, it is on something called as employee benefits. Now this is the first time ever that AS15 has landed up again in the CA inter syllabus, and this is a fairly complex standard. So I do believe institute, if it asks you questions, they will be fairly direct rather than having much more complexities, because the complex parts of this even at a final CA level are a little difficult to absorb. So what do you mean by AS15? This is on employee benefits. So this is an accounting standard which guides you on what should be the accounting in case of employee benefits. Can you give me some examples of employee benefits? Gratuity, pension, provident fund. No? That's it? Okay, there can be multiple other things. The most common of them can be salaries and wages. So salaries, wages, bonus, leave encashment, even some perquisites, gratuity, pension, provident fund, retirement benefits, voluntary retirement schemes, retrenchment compensation, all of them. The accounting for the same will be governed by AS15, accounting standard 15, except for share-based payments. What do you mean by share-based payments? ESOPs. So if you look at ESOPs, there's a separate guidance note which was earlier there in your syllabus and has now been removed. So the accounting for ESOPs is given separately. Other than ESOP, any other type of employee benefit, and it will be falling within the scope of AS15. Now when we look at the scope of AS15, it covers all employee benefits for all employees, and these employees may be formally appointed, may be informal, may be part-time, may be full-time. Even if there is casual labor, part-time labor, even benefits payable to casual labor will be covered over here. Like you might take someone on employment for 3, 6, 8 months, for example, casual employment. Even that will be covered under AS15. So it is not that this is only for employees who have been formally categorized as employee. No, any kind of employee benefit payable to employees who are formally appointed or even informal. And benefits can also be those benefits which are payable as per the terms and conditions of the contract, like salary. If you agree to pay 100 rupees as salary, that is agreed as per the contract, as per employment contract. That is definitely an employee benefit. But apart from that, when you study income tax as well, when you study salaries under income tax, you will study something like even gratuity. Now gratuity is something which is payable to employee if they complete a specific number of years, and it is payable generally as per the Payment of Gratuity Act. Now the Payment of Gratuity Act is a legal, so if your organization has a specified number of employees and you are an employee who has worked for more than 5 years, for example, then you are entitled to gratuity. Whether it is written in your employment contract or not written, it does not really matter. You are entitled for gratuity. Are we clear with this? So when we look at employee benefits, they can be as per contract, they can be as per law, or they can also be what we call as per past practices, constructive obligations. So salary which is payable as per contract is enforceable by law, or gratuity which is payable as per a Payment of Gratuity Act, these are enforceable by law. These are called as legal obligations. Apart from that, there is also something called as constructive obligations. What do you mean by constructive obligations? These are obligations which arise due to past practices or published policies for which an entity has no realistic alternative but to set up. बहुत अंग्रेजी बोल दिया आपने. What does this mean? For example, Diwali bonus. If we have, let us say, household maids or staff, household domestic help who comes at our place, we have agreed to pay them, let us say, X thousand per month. However, it is an unwritten rule, an unsaid rule that you have to pay them, let us say, 1 month or half a month of salary as Diwali bonus. Now, if they work for a month and you don't pay them salary, they can actually sue you and take you to court and make you pay that amount, that is legally enforceable. But if you don't pay them Diwali bonus, आपको दो चार गाली सुनना पड़ेगा. But other than that, can they take you to court and sue you for that? No. It is not legally enforceable. However, we know that it is something that you have to pay. If you don't pay, in all likelihood, they will leave the job. But they can't sue you to recover that money. So, employee benefits is a very wide term. Like employees over here are a very wide term, employee benefit is also a very wide term. It includes benefits payable as per contract, benefits payable as per law, also benefits payable as per past practices or published policies will be covered over here. Are we clear with this? Okay, so this is regarding employee benefits. Now, the standard has segregated the employee benefits into 4 categories. What are the 4 categories? First, there is something called as short-term benefits. As the name goes, these are benefits which are payable within 12 months. Short-term benefits. Can you give me some examples of short-term benefits? Salaries, wages, they are payable within 12 months of the service being rendered. So, April ka salary is payable usually in April or by the first week of May. So, that is within 12 months of the service being rendered. Even bonus to a great extent is payable within 12 months. Bonus is not payable each month, but usually services are rendered in a year and bonus is payable by the end of the year, or quarterly retention bonus type of thing, but it is usually within 12 months, and hence that can also typically be taken to be short-term benefits. Second, you have something called as post-employment benefits. As the name goes, these are benefits which are payable at or after employment. Can you give me some example for post-employment benefits? Payable at or after employment. Gratuity, pension, provident fund. All of these are payable when the employees retire, or like something like pension after the employees retire. So these go under the larger scope of post-employment, which is the most complex type of benefits. Then you have something called as termination benefits. These are benefits which are payable at the time of voluntary or involuntary termination. Like for example, VRS. Have you heard about VRS? Voluntary Retirement Scheme or retrenchment. Retrenchment means if you fire an employee, you have to give them some compensation. That compensation is called as a retrenchment compensation if you fire an employee. In a similar way, if you give VRS, like government don't fire employees. Private companies can. Governments usually don't, so they give VRS. कि भाई voluntary तुम निकल जाओ. VRS schemes. So these are termination benefits. Benefits payable at the time of termination. Maybe voluntary or involuntary. Gratuity was not because gratuity was payable because when you joined, you had agreed provident fund के हाँ जब भी आप retire होगे तब ये मिलेगा. But in VRS or retrenchment, your employment is cut short in the middle. उसके सामने compensation मिल रहा है. The employment is being cut short. So that is called as termination benefits. And the last type of benefits is something called as other long-term benefits. What do you mean by other long-term benefits? Is a residual category. What do you mean by residual? Leftover. If something is not covered in the first 3 categories, it automatically goes in the 4th category. So if something is not short-term, that is payable beyond 12 months, but before retirement, then that is other long-term benefit. Like Jubilee benefits. Jubilee समझते Silver Jubilee, Golden Jubilee, etc. Jubilee, let's say Silver Jubilee is 25 years. If someone completes 25 years in your organization, then the employee is still working. So the benefit that you pay them for completing 25 years is not post-employment. And again, this is payable if an employee renders 25 years of service. So it is not even short-term benefit. And hence this goes under other long-term benefits. It's like the residual category. What do you mean by residual? Leftover. If something is not covered under short-term, post-employment, termination, then by default it goes under other long-term. Are we clear with this? Okay. So employee benefits. AS 15 covers all employee benefits, both legal and constructive. Do you understand what is meant by constructive? Constructive would mean something like Diwali bonus, which may be informal. Legal may be something like salary or something like gratuity. Except share-based payments, which are covered, except share-based payments which are covered under AS 15 cancel कर देंगे, which are covered under guidance note for ESOP. Are we clear with this? Now there are four main categories of employee benefits. First, there is something called as short-term benefits. Short-term benefits are payable in less than 12 months like salary. Second, you have post-employment benefits, which is important, payable at or after retirement like gratuity or pension. Next, you have termination benefits, payable at the time of voluntary or involuntary termination like VRS. And then other long-term benefits, that is residual, leftover, that is payable after 12 months but before retirement. For example, a silver jubilee benefit. Are we clear with this? Now you will understand broadly the accounting for each of these categories. First अपन क्या करेंगे? Short term benefits. अच्छा, short term benefits are payable less than 12 months or beyond 12 months? So if the payment is made or payment is due to be made within 12 months, do you think the effect of time is material or not material? Any payment is made after 1, 2, 3 months. Is the effect of time material? What do you mean by effect of time? When you do FM, capital budgeting, when you do capital budgeting and you calculate things like NPV, net present value, do you try to find the present value of future cash flows? Do you say 100 rupees after 2 years is the same as 100 rupees after 5 years? So is the effect of time material? Yes, but if 100 rupees was to be paid after 5 days and the next 100 rupees was to be paid after 45 days, yes, there is a difference in time, but is that a very material difference in time? No. And as a result, the standard allows you to do a shortcut. It says chodo yaar, you don't need to do any discounting. And that is why even things like credit sale, credit purchase, you never do discounting. यार क्रेडिट परचेस आप आज रिकॉर्ड करते हो, पेमेंट इज मेड आफ्टर 3 months बट यू डोंट रिकॉर्ड इट एट प्रेजेंट वैल्यू. ठीक है यार, 3 महीने के बाद है यार, दैट्स नॉट अ वेरी लॉन्ग पीरियड ऑफ टाइम अवे. And as a result, the standard over here says that short-term benefits are to be recorded on an undiscounted basis. What do you mean by undiscounted basis? If 100 rupees is payable after, let's say, 1 month, you don't have to do time value adjustment के भाई ठीक है 100 rupees after 1 month is how much today. You say आज when should you recognize salary? When the salary is paid or when the service is rendered. As an organization, if I have to record salary expense for an employee, when will I record the salary expense? When the employee renders service or when I make the payment for the render service? Why? Accrual. Companies have to mandatorily follow accrual system of accounting, and accrual says expenses have to be recorded when they are incurred, not when they are paid. So whenever the service is rendered, salary is recorded. हाँ, but हमारा agreement ऐसा है कि for service which is rendered in March, payment will be made in April. Service which is rendered in April, payment will be made in May. हाँ तो ठीक है यार. In the month of March, you will pass the entry salary expense account debit to provision for salary, या फिर salary payable account, या फिर outstanding salary, कुछ भी नाम दे दे. But if the salary is 100 rupees, you will record it at 100 rupees only. अरे बराबर क्या नहीं? Salaries and wages are to be recorded as and when service is rendered. So if the service is rendered now, you will record salary immediately. If the payment is made after 1 to 3 months, so be it. Today I will record a salary payable, outstanding salary. या फिर sometimes it happens you pay advance salary. An employee needs money, he has his children's marriage, so he says यार 2-3 महीने का salary advance में दे दो, we give them in advance. Your journal entry is advance salary account debit to bank, and when the employee renders service, it is salary account debit to advance salary. Salary account debit to advance. Sir, but हमने 3 महीने का pay कर दिया, so can I record salary expense? Answer is no. You will not record on a payment basis, otherwise you are following cash system of accounting. You will record as and when service is rendered. So there are 3 broad examples of short-term benefits. The first 2 are fairly easy, the third is a little complicated, though Institute has, I think, in your study mat etc., at least not asked you anything meaningful regarding that complicated third part. So you have short-term benefits. As the name goes, these are benefits which are payable in less than 12 months. Short-term benefits to be recorded on an undiscounted basis. No separate time value adjustment. Salaries. Expense should be recorded when the employee service is rendered. Acha, for salary, when will you record? expense to be recorded when employee service is rendered, as in not when it is paid. Ajay sir, but what if it is paid in advance, advance salary account debit to bank, and then when service is rendered, salary account debit to advance salary? Sir, what if service is rendered but payment is not made? Salary account debit to outstanding salary, and when payment is made, outstanding salary account debit to bank. समझ में आता? Okay. Second, bonus and profit sharing plans. अच्छा, what do you mean by bonus and what do you mean by profit sharing plans? Like bonus can be of various types. Bonus can be performance bonus. The most common type of bonus, at least for people like you who will be having white collared jobs, will be performance bonus. Performance bonus means if you perform well, if the organization also does well, at the company's discretion you will get a bonus. That is performance linked. अच्छा, आपने बहुत ही अच्छा काम किया. Company is not doing well, but you worked exceptionally hard. The company does not pay you any bonus. Can you sue the company? No. So performance bonus is due when you render service or when the bonus is declared. When the bonus is declared, this is similar to dividend. भाई कंपनी कितना भी अच्छा परफॉर्मेंस करे, if the board decides, shareholders decide dividend नहीं पे करना है, there will be no dividend. It's not like interest. Interest salary के जैसे होता है कि भाई काम के आप आके बैठे रहे पूरा दिन, तो भी salary is due to you unless you are fired. But bonus, no matter how hard you work or you don't work as hard, if the company does well, if you are doing well, at the company's discretion you might get the bonus. So bonus is in a way is discretionary. When does it accrue? When it is declared. This is provided it is performance bonus. But sir, every bonus is performance? No. Some bonus may be retention bonus. What do you mean by retention? आजकल ऐसा हो रहा है कि भाई आप देख रहे हो लोग left, right, center people are leaving their jobs. I want to retain my employees. I will say, भाई तुम you stay with me for 6 months. You stay with me for 6 months, I'll pay you an X amount. अभी 6 महीने आपने कुछ भी काम किया फर्क नहीं पड़ता. You stay for 6 months, you are due to get the retention bonus. So when should you recognize retention bonus? When 6 months pass. उसके बाद पेमेंट भले आपको कभी भी मिले. The expense is due if the employee continues in service, for example, for 6 months. Are we clear with this? This is a retention bonus. Next you have statutory bonus. There can be various types of bonus. Now payment of bonus act करके एक होता है, which says for employees who are having less than 10,000 of salary, etc., you have to pay them minimum 8.33% of salary. This is statutory minimum you have to pay. In which case काम कैसे भी करे 8.33% of salary has to be paid. That is due to be recorded as and when it is incurred. Or in companies managing directors or MDs sometimes get a share in profit. 5% of net profit, 2% of net profit, 1% of net profit, etc. That is a profit sharing plan. So if the company has generated 100 crores of profit and our agreement is कि भाई MD को 5% मिलना है, then 5% of net profit, that is 5 crores, is due. The moment the year passes, profit is accrued, you have to pay that to the managing director. अरे बराबर क्या नहीं? So over here, bonus and profit sharing plans you will record as and when profit is earned. Bonus you will record depending on the terms and conditions of the bonus. Now expense to be recorded when obligation arises. For performance bonus, the obligation arises when it is declared. When it is declared. Statutory bonus when the service is rendered. Profit sharing plan as and when profit is earned. So the managing director, by the end of the year, if the profit is earned, 5% of the profit should be provided. Are we clear with this? Achha. Now these are fairly easy. This is a little complicated. Institute has not given you any detailed illustration on this. They have given you one small example. Again, like we did for AS23, we will do all illustrations, we will do all practical questions, and we will also go back to the study material and see if there are any examples. We will discuss the examples. So everything which is numerical is covered. आगे जाके RTP etc. is there, you can also refer that separate. बराबर? So whatever is the numerical part, we are good with it. So compensated leaves. Now this is tricky. Institute at final CA does have a lot of sums on this. At CA intern does not have enough sums on this. What do you mean by compensated leaves? Compensated leaves means, for example, if an employee, now this is a little tricky, okay. So let us say the salary per month of an employee, for example, is 1000 per month, okay. Now what they are entitled to is 30 days or 1 month paid leave. Do you understand what is meant by paid leave? What is paid leave? देखो बच्चे गलत समझते, they think paid leave means money will, that is called as leave encashment. That is not called as paid leave. Paid leave means you take a leave, you are still paid for that day as if it is a working day. Ideally अगर छुट्टी लो तो पेमेंट नहीं मिलना चाहिए आपको. You should get payment only for days that you are working. Paid leave means even if you take a leave, you will get salary for that day. That is called as paid leave, which is different from leave encashment. Okay, we will also study what leave encashment is, but for the timing this is paid leave. अच्छा, इसको इंस्टीट्यूट अपने लैंग्वेज में बोलता है कॉम्पेंसेटेड एब्सेंसेस और कॉम्पेंसेटेड लीव्स. दैट इज रिटन ओवर हियर. कॉम्पेंसेटेड एब्सेंसेस. कॉम्पेंसेटेड मीन्स पेड, एब्सेंसेस मीन्स लीव. नाउ कॉम्पेंसेटेड एब्सेंसेस कैन बी ऑफ टू टाइप्स, accumulating or non-accumulating. What do you mean by accumulating? Accumulating means you can carry it forward. Carry forward means आप बहुत ही वर्कaholic किस्म के आदमी हो. You worked for the entire year. You did not take a day of leave. आप वैसे हो नहीं, but let us say you are of that type where you work for the entire year, don't take a single day of leave. In which case, at the end of the year, if it is accumulating leave, that leave will be accumulated and carried forward to the next year. Non-accumulating leave will lapse. You will not get anything. You cannot carry forward. Maybe you want to carry forward to the next year because you have your CA exams in the next year, or you have some event in the next year, or you have to travel in the next year, or whatever it is. But non-accumulating leave है तो आप लो या यानी you take your leave or you don't take your leave, you can't carry it forward. That is called as non-accumulating. Do you understand? अच्छा, accumulating leave can be carried forward. Non-accumulating leave cannot be carried forward. Are we clear with this? Let us say you are the type of the employee who worked for the entire year. You did not take a single day of leave. How much salary will the employer pay you? 1000 per month into how many months? Pay you 12,000. Alternatively, had you worked for 11 months and taken 1 month of leave, still the employer would have paid you how much? 12,000 only, because the paid leave is 1 month, this is 1,000. ये समझ में? Now you did not take any leave. Does that mean the employer has to pay you 13,000? No. अच्छा, if it is leave encashable, where you can encash the leave, yes, then the employer, आप जाके encashment लोगे, employer has to pay you further 1,000. That is called as vested benefit. यहाँ पे बहुत English वाले words है. Vested benefits means benefits where you can claim encashment. You can claim encashment. For the timing, let us assume you cannot claim encashment, but you can carry it forward. So what will be your journal entry? You will say during the year your journal entry will be salary account debit 12,000 to bank 12,000. Are we clear with this? It is not encashable. In which case will you create a provision for another 1,000? No. However, it is accumulating, that is, it can be carried forward. What do you guys think? Should you create a provision for 1,000? You can't encash it, but you can carry it forward to be utilized in the next year. Will you create a provision? Tough one. Let us say this is year 1. Let us say you were to go to year 2. In year 2, let us say the employee takes 10 months of, he works for 10 months and takes 2 months of leave. Think and tell me, in the second year, the employee works for 10 months only. According to you, how much will the employer pay? Not 11,000. Why no? Because 1 month of the last year. Remember, the employer is paying you 10,000 because you have rendered service in the second year. 11th मंथ के लिए पेमेंट आपको मिल रहा है बिकॉज दैट इज लीव एंटाइटलमेंट ऑफ द सेकंड ईयर, बट द 12th मंथ आइडियली वुड हैव गॉन अनपेड इफ दिस वाज योर फर्स्ट ईयर, जहां पे आपने 2 महीने का छुट्टी ले लिया. 1 मंथ वुड बी पेड लीव, 1 मंथ वुड बी अनपेड लीव. एम्प्लॉयर वुड हैव पेड यू ओनली 11,000 rupees. Why is the employer paying you 12,000? Because of the first year. Acha, remember expenses are recorded not when they are paid, but when they are accrued. When was that expense borne? That expense was borne in the first year because you did not take the leave in the first year. Yes, it was utilized, encashed, or it was paid for in the second year, but accounting does not happen when the payment happens. Accounting happens when the leave occurs. You will say, "Bhai, 1,000 accrue kab hua?" You are paying this in the next year. You are paying this because in the first year you did. That means the 1,000 accrued in the first year. And as a result, in your first year, before you go to the second year, in the first year, you will pass another entry, leave salary or salary, जो भी आप नाम दो, it will go to the P&L, leave salary account debit to provision for leave salary. How much will that be? Achha, is it necessary it has to be 1,000? No, maybe you took 15 days of leave and 15 days you carried forward. Then you will make this provision only for 500. 1,000 into 15 by 30. Achha. Now when you go to the second year, the employee will work and payment will be made. Salary account debit to bank. अच्छा, टू बैंक कितना पेमेंट करेगा अपन? 12,000. अच्छा, 12,000 में से 11 into 1,000 is paid because of the second year only. Leave, paid leave of the second year plus 10 months of service in the second year. But the other 1,000 is reversal of the provision. 1,000. So if I were to, अपन ने इसके पहले के सम्स में P&L बना है. In P&L there is a heading called as employee benefit expense. If I were to recognize the employee benefit expense overall in the P&L of year 1 and in the P&L of year 2, how much will be recorded in the P&L of year 1? 13. Sir, how is 13 12 plus 1? 12 plus 1. In the second year, how much will be recorded? Only 11. Sir, 11 plus 1? No. 11. 1,000 is reversal of provision. That does not go to the P&L. So this will be 11,000. Sir, but ऐसे कैसे? हाँ, but that is because you worked more in the first year, work less in the second year, and hence there is an imbalance. If you had taken 1 month of leave in the first year only, 1 month of leave in the second year, then first year में अपने 11 महीना काम करके 1 month leave, second year also 11 महीना काम करके 1 month leave, then दोनों जगह 12-12 आता था. Sir, but at the end of the day, total is 13 plus 1, that is 24. How does it matter? No, it matters. Accrual. Matching concept, more service, more cost, lesser service, lesser cost. Now there can be a lot of complexities over here. We are just keeping it relatively straight. When do you need to do this? You need to do this whenever there is non-vested. Non-vested means you cannot encash leaves, but accumulating. You can carry forward. Let us say you cannot carry forward. Let us say your organization has a policy कि भाई तुमने भले छुट्टी नहीं लिया, I cannot carry it forward. If you cannot carry it forward, then what do you guys think? Why? Because then we will say it is like free service. कोई बोलेगा why? अरे next year if I work for 10 months only, will I get 12,000 rupees? No. I will get 10,000 plus 1,000 of the second year. I will not get anything. So अगर आपने ज्यादा काम कर दिया, that is without any cost for the organization, there is no extra cost, then why should I create a provision? So if it is the non-accumulating leave, will you create any provision for unutilized leave? You will not create any provision for unutilized leave. But if it is accumulating leave, will you create a provision for unutilized leave? Yes. To the extent the leave is expected to be utilized and we believe कि भाई पूरा leave utilized होगा, then you will create a provision for the leave which is expected to be utilized. All of this will happen if the benefits are non-vested. Means ये इतना झमेला तभी करोगे if the benefits are non-vested. Non-vested means you cannot encash. If you are encashed, कुछ दिमाग ही नहीं लगाना. Whether you can carry forward or you don't carry forward, you can claim encashment. I'll again repeat, if the leaves are encashable, then you don't have to rack your brains as much. You will say that these leaves are encashable, and if these leaves are encashable, it does not matter whether the employee is going to come and work or the employee is not going to come and work in the next year. He can claim encashment. He can carry forward, does not carry forward, does not matter. He will claim the encashment now, later, what, but he will claim encashment. So for vested benefits, you will always create a provision for unutilized leave. For non-vested benefits, which can be accumulated, you will create a provision for leaves which are carried forward and expected to be utilized. For non-vested, non-accumulated leaves, complete the following. No provision to be created. Are we clear with this?
Yes.
Acha, let us review this. We can even write a summary point over here. Compensated leaves. Over here you can say into bracket non-vested. Acha. Accumulating non-vested leaves can be carried forward but cannot be encashed.
Yeah.
Provision should be made for unutilized leaves which are expected to be utilized. Okay. Non-accumulating leaves, leaves that cannot be carried forward. Leaves cannot be carried forward. No provision to be made for unutilized leaves. Vested employees can carry forward leaves and can claim compensation or encashment for unutilized leave. यहाँ पे arrow करके लिखेंगे always create provision for unutilized leaves. अच्छा, नॉन वेस्टेड का मतलब होता है एम्प्लॉइज कैन कैरी फॉरवर्ड लीव्स बट कैन नॉट क्लेम एनकैशमेंट फॉर अनयूटिलाइज्ड लीव्स. So there's an example. Leave salary is 1000, entitlement is 30 days, carry forward permitted. For 1 year, actual leaves taken is 10 days. That means how much can be carried forward? 20 days. 30 days का entitlement है, 10 days are taken, 20 days can be carried forward. If nothing was given, you will create a provision for 1000 per month into 20 by 30, 667. Based on past experience, it is expected that employee will utilize only 15 days out of the 20 days carried forward. So we will create an expense for the entire 20 days or only that part which is expected to be utilized. Only that part which is expected to be utilized, which is 15 days. So you will create a provision. Institute इतने complexity में गया नहीं, at least at CA Inter. But you will create a provision for 1000 into 15 by 30. That comes to 500. Therefore, provision for leave salary would be leave salary to provision for leave salary. This is 15 by 30. In my opinion, if this comes in the exam, you will not be given that based on past experience, this and that. You will be given a fairly direct, easy, basic case. Are we clear with this? Okay, so this takes care about the basics of short-term benefits. A fairly easy working. We will try to discuss a few cases over here. काफी आसान है, at least the starting part. It's a lot of theory. We'll just quickly focus on the basic part. Let us go to question number 1 on page 180, I guess. So these are same institute questions and institute solution. You can have a summary solution for this. इतना बड़ा बड़ा case and pure theory case मेरे हिसाब से आएगा नहीं. The more numerical parts which are at the latter part of this chapter are more likely to come in the exam. We have reproduced institute cases, all of them over here, but I don't see them to be very इतने लंबे लंबे आंसर तो लिखने की जरूरत ही नहीं. Let us quickly review this. What are the kinds of employees covered under revised AS 15 and whether a formal employer-employee relationship is necessary or not for benefits to be covered under the standard. What kinds of employees? Only formal employees, only full-time employees, या फिर all types of employees you can write down. All employees, full-time / part-time. : formal / informal. 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 bracket closed, covered. Under AS 15. So basically all employees are covered under AS 15. Achha, if I just emphasize the relevant lines, they have given you a lot of unnecessary information in my opinion, but if you can just, there's no requirement for a formal employer-employee relationship. That an employee may provide service to an enterprise on full-time, part-time, permanent, casual would include all of these. It applies to all form. So, ये first paragraph आप बराबर से पढ़े. Second paragraph is not as important. It is just trying to distinguish a contract of service from a contract for service. Contract of service का मतलब क्या होता है? और contract for service, one of them means you are engaging in employment. The other means that you are appointing a third party who is working for you in a professional capacity. Like auditor is not an employee of the company. It's giving service as a independent third party. But an internal auditor or an accountant is an employee of the company. Yes, okay. So वो सिर्फ explain किया. An auditor etc. is not covered by this standard because they are not employees in the first place. Yes. Okay. So this is illustration number 1, fairly basic. Next you go to illustration number 2. Whether enterprise is required to provide for employee benefits arising from informal practices. What is the short and sweet answer? Do you need to provide, like Diwali bonus for example? Do I need to provide? Yes, you do. मैंने आपको बोला था standard covers everything. It covers, as we had discussed over here, it covers legal as well as constructive obligations. Like Diwali bonus मैंने आपको बोला था, it is not something which can be legally sued. But AS 15 says that this is something that you believe you will have to pay. If you will have to pay based on past practice, then might as well create a provision. अपन ने सुना one of the accounting principles is substance over legal form. Legal form means कि भाई legally if it is payable तो ही record करने का. In substance कि भाई legally भले payable हो या ना. In substance if it is payable you have to create a provision. So the short and sweet answer over here is yes, you will create. Is enterprise required to provide for employee benefits arising from informal practices? Yes. Example, Diwali bonus. अभी ये बड़ा कहानी लिखा है यहाँ पे. इतना बड़ा कहानी I don't think is actually required over here. I don't think you can skip all of this altogether. It's there in the study mat. सिर्फ ये देख ले. If the practice established by employer was consistent benefit granted either as a part of union negotiations or otherwise clearly established pattern, like a cost of living adjustment or fixed rupee increase, it could be concluded that an obligation exists and those additional benefits should be included in the measure of defined of the benefit obligation. Again the question says judgment has to be applied. So if past practices have given rise to expectation कि भाई ये तो पे होगा ही, then you consider. But if past practices have not shown कि भाई your employer is very stingy, पूरा दुनिया भले दिवाली बोनस पे कर रहे, आप नहीं पे कर रहे, then do you need to create any provision? No, because your employees have no expectation. So informal practices, judgment needs to be applied. If you believe that payment will have to be made, an unavoidable payment will have to be made on account of these past practices, then you create a provision, otherwise no. So you can mention in short, if payment is likely into bracket based on past practices, bracket closed, comma, then we should create provision for benefits arising from informal practices. Are we clear with this? Okay. So this is illustration 2. Acha, next is illustration number 3. Entity XY is required to pay a salary of 2 crores for the year 11-12. It actually paid a salary of 1.9 crore up to 31st March 12. Did it pay the entire amount? No. How much is still to be paid? 10 lakhs. And balance in April 12. Determine the actual cost to be recognized in the year 11-12 and any amount to be shown through the balance sheet. How much will be recorded as expense according to you? 2 crores. Entire 2 crores. And is anything appearing in the payable as a balance sheet? How much? So if you were to be asked the journal entry over here will be salary account debit 2 crores. To bank 1.9 crores, to salary payable or outstanding salary 0.1 crores. Okay, total expense is 2 crores and amount to be shown as liability is 10 lakhs. Easy? Okay, next is illustration 4. Again, इसका बहुत लंबा चौड़ा आंसर दिया, we can keep it short and sweet. Whether an entitlement to earned leave which can be carried forward to future periods is a short-term employee benefit or a long-term employee benefit? Well, it depends. It depends on for how many years your carry forward is permitted. The example that I told you had a carry forward permitted only for 1 year. But is it possible that the carry forward is permitted for 5 years? If the carry forward is permitted for 5 years and the utilization is going to, let us say, happen after 4 or 5 years, then it is not a short-term benefit. It accrues today, paid after 3 or 4 or 5 years. Well, it is not payable at retirement, but not even payable after 1 year, 12 months. And hence, this will become other long-term benefits. So, it depends on for how many years the carry forward is permitted and when the leaves will be utilized. So, over here, we can say, बहुत लंबा चौड़ा answer in short if you want to write, depends on the period for which carry forward is permitted and leaves are expected to be utilized. Full stop. Sub point A, if less than 12 months, short term benefit. Sub point B, if greater than or equal to 12 months, other. Long term benefit. Are we clear with this? Okay. Illustration 5. अच्छा, this is very long. I mean, if you read this ना, पैसेंस ही घूम जाएगा. इतना बड़ा solution देकर के lose the essence altogether in my opinion. So you have a broad understanding and proceed. I really doubt that you'll get a question like this, a 2-line question in your exam. They have a lot more to ask in this chapter, but it's there in the study mat, so we are doing this. Okay. In case an enterprise allows unutilized employee benefits like medical care, leave, travel, etc. to be carried forward, whether it is required to recognize a provision in respect of carry forward benefits. Is it required? Yes. A provision should be recognized for all benefits which an employee becomes entitled to as a result of rendering the service and should be recorded as a part of cost of service rendered during the period. You will definitely be required to recognize a provision for the same. Are we clear with this? Yes, just a second. We'll just try to see if I guess there are a couple of cases over here. Let me just I think there is a couple of cases. I mean, they are just general examples. We can try to quickly discuss this if I have this handy. Okay, so you can just focus on the screen for the time being. These are examples. They are not really sums, but you can easily they can make a case out of this. So let us say if you go to the examples, okay, so let us review this example over here. An enterprise has 100 employees. Can you see this? Okay, an enterprise has 100 employees who are each entitled to 5 working days of leave for each year. So they have 5 days of leave, 100 employees. Unused leave may be carried forward for 1 calendar year. So maximum you can carry forward for 1 year. So it's definitely not other long term, it's short term. The leave is first taken out of the current year's entitlement. ये tricky है. The leave is first taken out of the current year's entitlement and then out of any balance brought forward from the previous year. This is called as leave for. नहीं समझ में आया. For example, there are 100 employees. They did not work. I mean, they worked for the entire year. They did not take the 5-day leave. In the next year, they can carry forward these 5 days, but they also have the 5 days of the next year. So they have 5 plus 5, 10 days of entitlement. But now in the second year they take only 5 days of leave. So this is adjusted from which year's entitlement? Current year or previous year? Current year. Leave for last in first out. Last in means the leave will first be adjusted from the last accrued leave, that is the current year's leave, and then it will go to the next year. समझा आपने को? At 31st December 2004, the average unused leave is 2 days per employee. 2 days per employee. How many employees were there? 100. So your average unutilized leave is 200 days. Acha, think and tell me. If it is expected in the next year that the employees will take 5 days of leave, then will any part of these 2 days be utilized? No. If it is expected that the employees will take 6 days of leave, will any part of these 2 days be utilized? How much? 1 day. So should you create a provision for the entire 200 days or only 1 day into 100, that is 100 days? If I expect that in the next year employees will take 6 days of leave, so 6 days के जो 5 days है वो तो next year में accrue होएगा. But in the current year, 2 days are still unutilized. I am carrying it forward. Stand up को क्या बोलता है? You will create a provision to the extent the leaves are expected to be utilized. हमने example किया था. वहाँ पे हमने बोला था भाई 20 days is there, but I am expected to utilize only 15. So we created a provision for only 15. In a similar way, I can carry forward 200 days. But I am expecting to utilize only 100 days. Then I will create a provision only for 100 days. Now, is it necessary that all employees have to follow the same suit? Is it possible that 50 employees are likely to take 7 days of leave in the next year? 7 days. And the next 50 employees are likely to take only 6 days. Then provision कितने दिन का बनेगा? For 50 into 2 and for other 50 into 1. If I twist the case, देखो ये तो सिर्फ example है, but they can make a sum out of this. If I twist the case and instead of LIFO, FIFO is written, then you will create a provision full 200. Because by you take 5 days, 6 days, 7 days, you will first utilize it from the last year. Yes or no? चलो अभी आगे पढ़ते हैं. The enterprise expects based on past experience, which is expected to continue, that 92 employees will take no more than 5 days of leave in 2005. For 92 employees, will you create any provision? 0 days. And the remaining 8 employees will take on an average 6.5 days. For the 8 employees, you will create a provision for how much days? 1.5. Very nice. LIFO basis, which means 6.5 में से 5 days will be the next year only. But the next 1.5 days will be from the current year entitlement and hence a provision will be made for. ये आपको MCQ में काफी आराम से आ सकता है. We will get a provision for how many days? 200 days, 100 days, 0 days, 12 days. आपका आंसर क्या होगा? 12 days. The enterprise expects that it will pay an additional 12 days of pay as a result of unutilized leave that has been accounted. That is 1.5 days for 8 employees. Therefore, enterprise recognizes a liability pay equal to 12 days. It's a good example in my opinion. There is no sum that they've made on this, but in my opinion, it's a good example for you to refer. Barabar? Can we proceed further? Yes, sir. Acha, so this is one. Next, you go to profit sharing plan. Acha, let us review this. A profit sharing plan requires an enterprise to pay a specific proportion of its net profit for the year to employees who serve throughout the year. Like managing director. That is a profit sharing plan, 5% of net profit. If no employees leave during the year, the total profit sharing payments would be 3% of the net profit. The enterprise estimates the staff turnover. Staff turnover means employees leaving. Will reduce the payments to 2.5% of net profit. So you will create a provision for what? 3% or 2.5? So enterprise recognizes the liability and expense of 2.5% of the net profit. Are we clear with this? Yes? Okay, the next example I think they are in other long term या फिर है ही नहीं इतने. Fair enough. So over here we can now go to the next section, which is other benefits. So short term is done, including the relevant illustrations and the examples. Acha. Next is important. Now in my opinion this is the toughest of the lot. But इसके ऊपर at CA inter level institute expecting you to know everything is. आपने actuary का कोर्स सुना? Actuarial valuation is this valuation and actuary does all of this. तो actuary का तो खुद का इतने levels का कोर्स है, 8-10 level है उसके अंदर. So even a chartered accountant is not expected to do this valuation. A chartered accountant will go to an actuary and an actuary will give a certificate. But we should know basics. Okay? So over here we go to post-employment plan. Now listen to this carefully. First is the theory part. What do you mean by post-employment plan? These are plans where benefits are payable at or after retirement. Such types of plans are called as post-employment plans. Like you gave me some examples of gratuity, pension, provident fund, etc. I hope you have done this in tax. Otherwise, आप जब income tax करोगे, you will have enough things in salary to discuss these. Alright. So over here, there are two types of plans. There is something called as a defined contribution plan, and then there is a defined benefit plan. What do you mean by defined contribution plan? A defined contribution plan means a plan where the amount of contribution to be made is defined. Whereas a defined benefit plan means no matter whether you do contribution or not, the benefit to be paid is defined. आप मुंडी हिला रहे हो बट कुछ समझ में आता नहीं. What does it mean? Defined contribution plan would mean a plan where the moment you do your share of contribution, you are not bothered with what the final liability will be when the employee retires. Your responsibility is to just make that contribution. Like if there's a statutory provident fund, what do you mean by statutory provident fund? Provident fund in India, generally the biggest fund is maintained by the government of India. Your organization pays in every year 12% for example from their share, employer's contribution आपने सुना है इसके बारे में, and 12% deduction from employee contribution to the government. The moment that 12% is paid off, the employer has no further responsibility. कल उठ के there's a big fraud over there. The fund does not have money to pay to the employees. Employer बोलेगा मेरा lookout नहीं है. My responsibility was to pay 12%. I paid it. Or the government before elections one fine day comes and says कि भाई interest on provident funds which was available at the rate of 8% हम अभी 10% कर देंगे. Employer says मेरे को क्या लेना देना? I had to contribute 12%. I have contributed. जब भी employee retire होएगा, he will get whatever that is. Such plans are called as defined contribution plans. The amount of contribution that you have to make is defined. The final liability we don't have to estimate. Kabhi retire hoega, how much he will get, that is none of my lookout. On the other hand, the defined benefit plan, you will have to estimate the liability. Like gratuity, you will study that in income tax, but gratuity is typically payable by different formulas. One of the most common formulas for paying gratuity is 15/26 or 1/2 into the last drawn salary into completed years of service. Now the problem over here is sinking fund. Suna apan? Have you heard about something called sinking? Sinking fund means you keep aside some money to meet some expense in the future date. You want to buy a house, you want to finance someone's education, you want to let us say pay gratuity, you keep aside some money every year. So you know that you have an employee, you know that the employee is working currently, you have to pay him salary currently. Gratuity हमको टेंशन नहीं, हम बोलते भाई जब भी रिटायर होएगा तभी पे करेंगे. Cash system of accounting would have said record gratuity when the employee retires. Accrual says कि भाई you are paying when the employee retires, but gratuity accrues not when the employee retires, but it accrues as and when the employee renders each year of service. As the employee renders the first year of service, second, third, fourth, fifth, sixth, seventh, eighth, करते करते one unit of gratuity keeps on building. Are we getting this? यानी जैसे उसने 5 साल सर्विस दिया, let's say 15/26 approximately is like 1/2. Approximately, like if they give the salary is 10,000, let's say you render 5 years of service, you will have to pay him 25,000. But if he renders the 6th year of service, you have to pay him 30,000. If he renders the 7th year of service, you might have to pay him 35,000 and so on. So for each year of service, maybe 5,000 is getting built up. You will actually pay when the employee retires, but you don't need to wait. But you actually don't need to wait till the time the employee retires. You can recognize this as an expense as and when each and every year of service is rendered. The moment each and every year of service is rendered, that is when you should actually recognize. Are we clear with this? You can recognize this when each and every year of service. Now, you might say, ठीक है यार, I think that the employee will continue in service for 5 years. I think his last drawn salary will be 10,000, and hence 25,000 I have to pay. So let us say every year I am contributing around 4 to 5,000 in a fund. कि भाई आज 5, next 5, some interest I will earn. करते करते I will build up 25. But what if just before the employee was going to retire, he did a very good job and you gave him an increment? His last one salary became 50,000, for example, and then he put in his papers. So you have to pay him 50,000 into 1/2 into 5 years of service. You have to pay him 1,25,000. कैन यू से कि भाई मैंने तो 5,000 कंट्रीब्यूट कर दिया था, आई डोंट केयर, कैन यू से दैट? नो यू कांट, because your liability is defined, not your contribution. How much you have to pay is, the formula is defined, how much you have to contribute is not. But provident fund में उल्टा है. When the employee is retiring, government increases the interest rate, government do, मेरे को उससे लेना देना नहीं. I have contributed my 12%, end of story for me. Now how many years you work, what is the rate of interest, that is not my lookout. Defined contribution plan, both benefits are payable at the time of retirement. Are we getting this? Acha, you are saying yes, let me see if I have understood. Two examples I will tell you. First is a group mediclaim plan. Group mediclaim plan that I have promised to my employee. I have said कि भाई तू बीमार पड़ेगा तो I am doing insurance for you. Ideally for insurance you have to pay premium. Instead of you, I will pay premium on your behalf. And second is a medical reimbursement plan. Medical reimbursement plan where we are saying कि भाई तू बीमार पड़ेगा, I will give you reimbursement. Both of them are employee benefits. You tell me, the mediclaim plan is a defined contribution plan or a defined benefit plan? Sorry? Group mediclaim plan. Contribution or benefit? Why benefit? What are you liable to pay? So premium you have paid. After that, do I have to estimate that how much will the employee fall sick? How much do I have to pay? Will he fall sick? Will he not fall sick? What if something like COVID happens? I have to pay so much. Do I have to bother about it? That is the insurance company's lookout. That means such a plan, my obligation is to pay the premium amount. That is the contribution. The moment I pay that, I don't have to bother about the liability. So mediclaim plan is very similar to a defined contribution plan. But medical reimbursement, I have not taken any insurance. I have told you कि भाई तू बीमार पड़ेगा, I am there for you. Now do I have to estimate the health of my employees? If something like COVID happens, how will I manage it to pay? I think my employees are fit and fine. अरे but COVID हो गया, तो यार इतना खर्चा हो जाएगा. And as a result, am I exposed to the liability? Can I say no, I thought that you will not fall sick, I just contributed 5,000 each? Is that? No. So medical reimbursement plan is similar to a defined benefit plan, whereas a mediclaim plan is similar to a defined contribution plan. So what does the standard say? Standard says that in case of a defined contribution plan, the actuarial risk and the investment risk is not borne by the employer. What do you mean by actuarial risk? Risk that the liability may change. Actuarial risk, the risk that the liability may change. Like in provident fund, कल उठ के rate of interest increases, I don't care. But in gratuity, if your last one salary increases, number of years increases, I do care. The risk that the liability might change is very much on me. Investment risk is, let's say I have kept aside some money. If the investment falls short, I still have to pay the liability. But when I contribute to the government and government's investment falls short, that is none of my lookout. Investment risk is not on me. कि भाई investment will not be sufficient, वो तो उनका lookout है. The employee fights with the government. So in case of an defined contribution plan, the employer does not bear the actuarial risk, that is the risk of liability changing, or the investment risk. But in case of a defined benefit plan, the employer bears that. Are we clear with this? So the accounting for a defined contribution plan is extremely easy. In case of a defined contribution plan, the accounting is very similar to salary accounting. कि भाई ठीक है, 12% of salary, 100 rupees का salary था, 12 rupees has to be paid. If already paid, then entries PF contribution account debit to bank. If not paid, entries PF contribution account debit to PF contribution payable. If it is paid in advance, the entries prepaid PF contribution account debit 12 rupees, PF contribution account debit 12 rupees to bank 24. अगर मैंने 24 पे कर दिया तो now I don't have to get an actuary or an expert to tell me ke bhai what will be the liability, because I don't care what the liability would be. I will call my insurance company and tell मेरे को प्रीमियम बता. I will call the EPF office and I will say मेरे को तू कितना contribution करने का वो बता. That's it. That is my expense. I don't need any experts to estimate and tell me what my liability would be. However, in case of a defined benefit plan, it is very difficult. Like gratuity, you will have to estimate for how many years the employee will render service to you. You will also have to estimate that when he retires, pehle to it is very difficult to estimate how many years employees will render service. But if you somehow estimate that, then when he retires, what will be his salary? All of that is a very, very difficult thing to measure. Are we getting this? And as a result, this is what you mean by defined benefit plan. You have to estimate the liability. In fact, ये तो मेरे हिसाब से थोड़ा आसान है. Imagine pension. आपको सोचना है कि भगवान के पास कब जाएगा. You have to estimate mortality rates because pension continues till the time the employee is alive. A lot of inflation, a lot of other adjustments. So it is very difficult. Now, management can estimate the useful life of PP. He cannot estimate useful life of a human being. Management does not estimate. It's very difficult, and hence we need the services of an actuary. An actuary is supposed to be a person who is expert in long-term liability estimation. So you will go to an actuary and you will say कि भाई देखो ये मेरा plan है. These are my employees. I have promised them that I will pay them this much pension, but I am unable to figure out that what the ultimate cost would be. So an actuary will do the working and they will give you, and you as a chartered accountant are responsible to present that appropriately. Now institute ने इसके ऊपर गिन के एक या दो sum डाले in your material, but if it comes in the exam, in my opinion, वो एक आध दो sum का ही maximum probability है. We have included a very complex illustration. It is not there in your CA material. So you can refer that for your understanding purpose. If you find difficulty in that, ज़्यादा load नहीं लेने का. It is not there in the CA material. It is not going to come, and it is helping you. नहीं छोड़ना नहीं है अपने को. So it is going to help you to understand that method which the actuary uses fairly well. Usually institute ने इसके ऊपर एक ही sum डाला. There could have been more sums, but considering CA Inter, they have probably kept it simple. एक sum भी काफी आसान वाला डाला है, but nevertheless, we'll try to do a much more complex one. Are we getting this? So an actuary, now we are doing extra knowledge for a better understanding of the standard. So if you you can skip and proceed further to the actual accounting, otherwise you can just have a broad understanding of this and proceed. थोड़ा भी आपको समझ में आ गया, it will help you in your overall concept base rather than just rectifying whatever is there. So over here you have something called as actuarial measurement, which is done by projected unit credit method. Now the services of an actuary are recommended. It is not mandatory, because लोग बोलते हैं यार ये तो कितना महंगा है. Why should I for accounting spend money to pay actuary certificate? So they have said कि भाई तुम्हारे पास talent है तो तुम खुद estimate करो. If you think you are unable to estimate, we recommend you use the service of actuary. Though actuarial valuation is not mandatory, it is recommended. Are we clear with this? And how will an actuary measure? Using something called as a projected unit credit method, and we will use an example, a fairly detailed and a complex example to understand the mechanics of a projected unit credit method. Okay, let us review the theory once. Post-employment plans, this is on page number 56. Post-employment plans can be defined contribution plans, or post-employment plans can be defined benefit plans. So when I look at defined contribution plans, the employer's obligation is restricted to the contribution amount. This is a defined contribution plan, but in like a statutory provident fund or a medical insurance plan. But when you look at the defined benefit plan, the employer is liable to pay the amount of employee benefit agreed irrespective of the contribution. It does not really matter what your contribution is. You are responsible to pay whatever is a promised liability like gratuity or medical reimbursement. Second, actuarial risk, that is a liability risk and investment risk. आगे नहीं पढ़ेंगे. You guys tell me, in defined contribution plan, does the employer bear those risks? No, are not borne. by the employer. But in the second case, you guys tell me, benefit plan, does the employer bear? Yes. Actual risk, that is a liability risk and investment risk, are borne by the employer. Third is the accounting. Contribution plan, very easy. Record expenses, that is contribution, as and when the obligation arises for the contribution. You record expenses as and when the expenses are accruing. No need to predict the liability here. But in defined benefit plan, the entire benefit, that is a liability, needs to be estimated. Using the projected unit credit method, actuarial valuation is recommended. Now, types of plans, this is not at all important. This is pure theory. We will do that later. We will review that later. Now we will go directly. Key terms is important, but uske pehle we will just go to the detailed example once. Now Mr. X is the only employee of X Limited who was recruited at the beginning of the current year. Again, Mr. X is the only employee of X Limited who was recruited at the beginning of the current year. He has been promised a lump sum payment at the time of recruitment at 1/2 into the last drawn salary into completed years. This is lump sum payment. Lump sum payment when he retires. So he will get that. Is it appearing to be like a defined contribution plan or a defined benefit plan? Appears to be similar to what? Defined benefit plan or contribution? Benefit. Why benefit? We have to pay this. Is last on salary becomes double, I cannot say I was contributing this much so you take this much. The liability is defined, not the contribution. At the end of year 1, actuary has made the following assumptions. So this was actuarial assumptions. So over here, actuarial assumptions would be taken. So last drawn salary is 10,000. Estimated years of service are 5 years, out of which 1 year is served and 4 years are yet to be served. And discount rate is 10%. This is typically the rate of the government bonds. Why? Because typically the government bond rate, like if you have to provide for employees safety, you will keep money in the safe asset. Government bond rate is taken, let's say discount rate is taken as 10%. Whatever be the reason, these are actuarial assumptions. You don't have to go and find this. This will be given to you. The plan is unfunded and has no plan assets. For the time being, ignore that. Calculate expenses and liability for each year. Calculate the expenses and liability, for example, for each year. Acha, now what is your plan? If I look at the plan is 1/2 into the last drawn salary into completed years of service. Now, as per the actuary, how many years is the employee likely to work? 5 years. But has the employee worked for all the 5 years? No. How many years has the employee worked? 1 year. So, for 1 year that the employee has worked, for each year that the employee works, what is the benefit that is accruing? 1/2 into the last drawn salary. What do you think is the last drawn salary? Is it given to you? Yes. Achha, sometimes the institute may not directly give you the last drawn salary. Like the sum that will be there in your study material, today's salary is given. Then usko par aapko increment add karna padega. To reach up to the last drawn salary, they might tell you that every year today's salary is, for example, 5,000, and each year 1,000 is expected to go up. Then 5 plus 1 karke 5 years later, this will become, for example, 10,000. Here it is directly given. What are we supposed to do first? Please pay attention. You are supposed to find the benefit attributable to each year of service. 1/2 into the last drawn salary. What is the last drawn salary? 10,000 into each year of service. First year of service, how much is that? 1. into 1. So this is what? 5,000. Now 5,000 accrues because Mr. X worked for the first year. Is 5,000 payable immediately? It is payable after 5 years, but it does not accrue at the end of the 5th year. It becomes due, payable at the end of the 5th year. But accounting happens not when payment is made. Accounting happens when the expenses are accrued. So when are your expenses accruing? As and when service is rendered. When the second year of service is rendered, another 5,000 will accrue. Third year of service, another 5. Fourth year of service, another 5. Fifth year of service, another 5. And if the actuary's assumptions are correct, at the end of the 5th year, the salary would have been 10,000 and he will put in his papers, he will resign and you will have to pay him. For example, 1 by 2 into 10,000 into 5, that is 25. But 25,000 does not accrue at the end of the 5th year. 25,000 accrues as 5,000 in each of the years. आपको समझ में आ रहा है? Projected unit credit method means based on the projected salary as each unit of service is rendered. That is when you record expense. Are we clear with this? So ideally in the first year, how much expense should be recorded? First year, how much should be recorded? Perfect. It should be 5,000. But the problem is, now is this 5,000 payable within a few months or a few days? No, it is payable after 4 years from the end of the first year. Dekho, 1 year is already served. So 4 years are remaining. So you're already at the end of the first year. Payment is not 5 years away. Payment is 4 years away. समझ में आ रहा है? Now comes the problem. So should you consider time value? Yes. Sir, but we did not consider earlier. हाँ, because the effect of time was not as material. यहाँ पे तो चलो मैंने 5 साल लिया, लोग तो कंपनी में 20-20, 30-30 साल रहते. So money payable after 30 years is not equal to money payable today. And hence to say कि भाई 5,000 चलो record. अरे but 5,000 payable after 5 years is not equal to 5,000 payable today. And hence, is it appropriate to record the entire 5,000 or the present value of 5,000? Present value. If you have done capital budgeting, present value working should be easy. If you have not done, then वो थोड़ा मुश्किल पड़ सकता है. But you will understand it in due course the moment you do capital budgeting. How do you calculate present value? Let us say discount factor is 10%. So you will say कि by 5,000 payable after 4 years. 4 समझा कहाँ से? Amount is payable after 5 years from the employee joining. But employee को join होके 1 साल हो गया है. So that is 4 years away. Into what we call as a present value factor at the rate of 10% for the 4th year. On your calculator, this is 1 divided by 1.1 raised to 4. Discounting is nothing but the opposite of compounding. Compounding का formula क्या था? A equals P into 1 plus R raised to N, where A is the amount in the future. So A upon 1 plus R raised to N is equal to P. P is the present value. So if I know that 4 years later I have to pay 5,000, how much will that be worth today? 1 plus R, that is 1 plus 10% raised to 4. Payable 4 years later. So over here, this is what? This is 1 divided by 1.1, 1, 2, 3, 4. This is 0.6830. 5,000 into 0.683. This is 3415. Now can I record this as an expense? Yes. Now this will go under the larger heading of employee benefit expense. Salaries also goes under employee benefit expense. Wages also goes there. Everything goes there. But within that larger heading, you will bifurcate this. Like salary अलग होता है, wages अलग होता है. अरे बराबर क्या नहीं? This 3415, listen to this carefully, arises because of current year service. This arises because you gave service in the current year. And hence this is called as current service cost. CSC. This is called as current service cost. Your journal entry will be employee benefit expense account debit. But within employee benefit expense, you will call this as current service cost account debit to gratuity payable. Every provision for gratuity, every provision for a defined benefit obligation. Sir, why are we creating a provision? Because it is not yet paid. Sir, but why are you calling it as a provision? Because amount is uncertain. Provision hota hai when there is uncertainty. And hence, you will have 3415. 3415. Are we clear with this? So over here, at the end of the first year, there will be current service cost. Current service cost, and there will also be, इसको अपन DBO बोलते हैं. This is expense in P&L under the heading of employee benefit expense or expense in the P&L for the time being. What is DBO? DBO is defined benefit obligation. The benefit is defined benefit plan. Obligation is like the liability. This is your liability, which should appear in the balance sheet. Acha, was there any opening liability? Asset liability में तो opening closing होता है. Expense does not have opening closing. Asset liability has opening closing. Was there any opening liability? No. Sir, why? Because no service was rendered. Plus, was there service in the current year? Yes. So, because of that double entry, your expense went up by 3415. Your liability also went up by 3415. Was anything paid in the current year? No. So, your closing would be 3415. Are we clear with this? Now comes the problem. Let us say you go to the second year. Is another year of service rendered? If another year of service is rendered, that will entitle you to a further, how much amount? 5,000. But that further 5,000 is payable after how many years? Sorry? Very nice. You are now 2 years into the company. You are expected to retire after 5 years. 2 years are done, 3 years are remaining. And hence, at the end of the second year, because of the service rendered during the second year, you believe that 5,000 is payable, but that 5,000 is payable after 3 years. And as a result, you will say कि भाई ठीक है, वापस employee benefit expense account debit, current service cost to a further provision. Acha, what into what? 5,000. Because of the second year of service, 5,000 accrues into present value factor at the rate of 10%. For which year? Third year. On your calculator, 1 divided by 1.1 equals to 3 times. Your answer will be 7513. 5,000 into 0.7513. In your FM, आपको कुछ आए ना आए, आपको 10% का discounting factor आ जाएगा. So it will be done multiple times. So over here, let us ignore the decimal for the time being. This will be 3756 or 57. Let us say 3757. Achha, is this also current service cost? Yes. Why? Because this is due to the service rendered of the second year. Had you not rendered service in the second year, this would not build up. This is due to the service rendered in the second year. Achha, so if I go to the, so this is the first year. This was the first year. If I go to the second year, in second year, what is the opening liability? 3415. Why will the, achha, in your P&L, current service cost will come? How much will that be? अच्छा, but to double entry 3757 की वजह से in the second year you are recording an expense, but will your liability increase? Yes. So this is plus current service cost 37. Is anything paid at the end of the second year? No. So what will be the closing ideally? 3415 plus 3757. This will be 7172, and this process can continue. So ultimately after 5 years you should land up where? Slowly if you keep on doing this, after 5 years you should land up where? 25,000, your actual liability. Acha, do you think 7172 is correct? Yeah. How will you verify this? Expenses are for the period, but liability is as on date. बराबर से सुने, liability is as on date. As at the end of the second year, how many years of service have been provided? 2 years of service have been provided. I'll again repeat. As at the end of the second year, how many years of service have been provided? 2 years of service have been provided. अरे बराबर क्या नहीं? Now, if I were to measure the liability, 5,000 is expense for each year. If I were to measure the liability, I will say till the end of the second year, how much service is rendered? 1/2 into 10,000. सोच के आंसर देंगे. Into what? Very nice. Into 2. Till the second year, 2 years of service are done. For the second year, we will say only 5,000 accrues. But till the second year, 1 year is done, second year is also done. And as a result, the amount that accrues is what? 1/2 into 10,000. This is what? But यार ये तो 7172 आ रहा है, आंसर गलत लग रहा है क्यों? डिस्काउंट नहीं हुआ है. 10,000 is accrued till the second year, but it is payable after 3 years from the end of the second year. So this will again be into the present value factor at the rate of 10% for the third year. This is into point. So your answer should be 75. Again it is not telling. Why is it not telling?
Because the first year is for
perfect. When you did the working in the opening, we said 3415 was 4 years away. Now out of those 4 years, 1 year has already passed. And hence is the 3415 still 4 years away? Now 3 years away. And as a result, इसको अपन unwinding बोलते हैं. Slowly, see, expense actually was 5,000. You wound it up and said कि नहीं expense 3415 है. But actually तो after 5 years, 4 years later, you have to pay 5,000. So slowly as each year passes, the 3415 will converge, proceed towards 5,000. And as a result, there is an adjustment called as interest adjustment. What is interest adjustment? Interest adjustment says that as each year passes, I will come closer and closer to the payment. My opening balance, which I was claiming, was 4 years away. Due to the passage of time, is now 3 years away. And as a result, you will record a further cost, जिसको हम बोलते हैं interest cost. Sir, first year में record नहीं किया. अरे because first year में there was no opening balance only. So here this will be 3415. You have discounted it by 10%. The opposite of discounting is compounding. In discounting you divide, in compounding you multiply into 10%. This is what? 342. डबल एंट्री. ऐसा नहीं चलेगा कि भाई यहां पे ऐड कर दिया. डबल एंट्री. If liability increases by 342, something has to be debited. What will be debited? P&L. यहां पे इसको अपन क्या बोलेंगे? Interest cost. How much is that? 342. If I now try to total 3415 plus 342 plus 3757, there you go, 7514, which is for all practical purposes almost equal to the 7513. That is your right answer. Sir, but then why is 342 recorded as interest cost? Why is it not current service cost? Because 342 is arising due to passage of time. अच्छा, आप sabbatical समझते हो? नहीं? Let us say sabbatical means you are taking a long term break. आपने 1 साल काम करके आप थक गए. You say no, I want a break. Enough. I want to detox. I want a break. Let us say for 1 year. Employer says कि भाई ठीक है, you take a break. We will not pay you any salary. And when you get that lump sum payment, now you get 1/2 into last one salary into completed years of service. ऐसा नहीं कि भाई अपने 5 साल का सर्विस है उसमें से 1 साल ब्रेक ले लिया तो they will not pay you for 5 years. They will pay you only for 4 years. So basically, when hypothetically, if you render service in the first year, 3415 accrues. Second year you take a break. Will this 3757 accrue?
No.
No, current service cost is arising due to current year of service. But आपने तो second year में कोई service ही नहीं दी है. So there will be no CSC. But will there still be 342? Yes, because that first year is now one more year closer. So दोनों को mix नहीं करना है. We can't say चलना है दोनों एक नहीं है. 3757 is arising because you rendered service in the second year, whereas 342 is arising because time has passed. Whether you render service or not does not matter. Time has passed. That is why 342 is building up. And in my opinion, this is the most complex case that at CA inter level you will get. आपको ये अगर करने को आ गया to reach up to 25,000, you are sorted in my opinion. So over here, what is the journal entry? Your journal entry will be employee benefit expense account debit, current service cost 3757, either employee benefit or finance cost. You can take either of this. Interest account debit 342, to provision. To provision. You are increasing your provision by how much? 3757 plus 342, this is 4099. तो जो आपका opening था ना 3415, that is increasing by 4099 to reach up to 7514 approximately. And this process will continue. We will try to prepare a table. If I have to prepare a liability, I will say कि चलो एक काम करते table बनाते year 1, 2, 3, 4, 5. If you get clarity on this table ना, भले आप आगे का चीज समझ पाओ ना समझ पाओ, a lot of your CA intergrade should get done. But we will also have to study the other complex cases. उसमें छोटे-छोटे cases आ सकते. Opening, employee has not rendered any service, nothing. Ideally, opening should become 1 year closer at the rate interest. First year में तो interest ही नहीं है, because there is no opening. अच्छा, next, why should your liability change? In the first year, you will render service. This is called as CSC, current service cost. For each year of service, how much benefit is accruing? 5,000 into what? 0.683. Why? You are at the end of the first year and the 5,000 that accrued in the first year is payable 4 years later. And hence this became 3415. Did you have to pay anything in the first year? No, and hence the closing became 3415. In the second year, your opening was 3415. Did that opening come 1 more year closer? So this was 342. For example, this is 3415 into 10%. Next, this is another 5,000 because you rendered the service. This is 0.7513. So this is 37. ये बच्चे नहीं समझ पाते. This is, sir, why is this coming to 7513? Because now you are at the end of the second year. The service of the second year is rendered, but the payment for that is going to happen after 3 years. And as a result, this is 3757. This is what? 7514. Here, if I want to reconcile, can I reconcile? Ji haan. I can do 7514 is nothing but 1 by 2 into 10,000 into 2. That is 10,000 payable, but after 3 years into 0.7513, and you will get exactly the same answer. Slight rounding of difference is accepted. Achha, now guide me with this. आगे का हमने किया नहीं है. You will have to guide me. 7514. Next what? Interest is how much? 751. Current service cost is how much? 5,000 into 0.8264. So this is 5,000 into 0.8264 comes to, यार closing कितना आएगा? Liability is building up. 7514 plus 751 plus 4132, 12,000. You want to verify this once? 1 by 2 into 10,000. Tell me, into what? 3. 3 years have gone by. And hence your liability should ideally be 15,000. But 15,000 payable after how many years? 2 years. So into 0.8264. 15,000 into 0.8264, and you have around 12,396, a 1 rupee difference, but that's fine. and slowly you proceed. 12,397, this is 1240, this is again another 5,000 is getting built up into 0.9091, 45 शायद से 46. So this is what 12397 plus 1240 plus 4546, 18183, and last year 18183. Acha, this is directly 5,000. Why? Because 5,000 is due at the end of the 5th year and amount is payable at the end of the 5th year. Ultimately, your total payment last year you usually take as a balancing figure. 1/2 into 10,000 into what? 5. Ultimately, आपको कितना पे करना है? 25,000. So last year's interest we typically take as a balancing figure. So over here, this is what? Is it 1817 approximately? I mean, for all practical purposes, that is 18183 into 10%. That is 18118. अगर आप टोटल करते तो 25,001 आता था. तो इसके लिए you take that in the balancing figure as interest typically, and that's it. So what would happen in each of these years? Your journal entry would be current service cost account debit, interest cost account debit to provision. Where will current service cost go? P&L. Where will interest cost go? P&L. And where will provision appear? Liability. Ultimately, ऐसा एक साल पे नहीं करते, but ultimately if I go to see, if I take the total of interest 342, 751, 1240, 1817, this is 4150. If I take the total of current service cost 3415, 3757, 4132, 456 and 5,000, this is 20,850. So if I take the total over the years 4150 and 20,850 over the years, the provision comes to 25,000. Now at the end of the 5th year, when the employee retires, I have to pay him. So provision account debit 25,000 to bank 25,000. और ये पूरी फसाद की जड़ थी. Earlier what used to happen is before AS15 was there, लोग हाथ खड़े कर देते थे. They used to say कि भाई हमको पता ही नहीं है when the employee is going to retire. We don't know what the last one salary is. तो AS15 says you estimate. नहीं, we don't know how to estimate. You take the actuary if you don't know. If you know, you estimate. But you can't say I don't know how to estimate. You will have to estimate. Because otherwise, in the older days, what used to happen is, in the first 4 years, there would be zero expense. And then suddenly in the 5th year, P&L account debit 25,000 to bank 25,000. लोग बोले कि अरे जब ये employee छोड़ रहा इतना खर्चा. But that kharcha did not build up in the 5th year. That kharcha built up over 5 years. And hence if you go to see, this expense is getting recorded over 5 years, and at the end of the 5th year when the employee actually retires, there is no further cost. Are yes or no? And as a result, this is a much more superior method of accounting as compared to what was happening earlier, where you would wait till the time you make the payment. Are we clear with this? Yes, there are some challenges over here which you will address in the other parts of the example. कि भाई हम तो मान रहे हैं कि भाई actuary ने बोला 10,000 में, is it necessary? Actuary says 10,000, it has to be 10,000. No, that estimate can change. How will you account for that? आगे हमने वो किया हुआ. Institute does not have a separate illustration or sums on those lines, but we have tried to incorporate that as well. Even at CA Intergrade, तो आपको एक idea है कि what will happen if actuary changes his assumptions. Actuary can practically change. In fact, the plan can also change. We will see what that happens, but uske pehle at least step by step we get clarity up to this point, and we try to do a sum, one of the most important sums in my opinion, on these lines. Okay, so first let's read the theory over here on page 57. Workings, the benefits attributable to each year of service is 1/2 into 10,000 into 1, that is 5,000. As an employee works for the first year, an expense of 5,000 accrues. However, as the expense would be paid on retirement, we will have to record it on a present value basis. That is, defined benefit expense going in the P&L to defined benefit liability. 3415. So this is at the present value factor. Further, as each year passes, the opening obligation is one more year closer, and hence the interest cost will also be recorded. So you understand the logic for interest? Further, as each year of service contributes to employee getting additional benefit, current service cost is also recorded. दोनों का रीजन अलग अलग है. Indus is recorded because the opening obligation comes one more year closer. Current service cost is recorded because in the current year the employee renders service. And that similar table is prepared over here. Acha. You go to the earlier page and you focus on these two key terms, point 1 and point 2, both of these being important. Current service cost, it is the increase in the liability due to employee service in the current year. We discussed this. 3415, 3757, all of that is increase due to the service. Interest, it is the increase in liability that arises due to passage of time. That is opening liability into discount rate. Based on this, we will go to a sum in your books. Please go to the question. थोड़ा पीछे आएगा, I think वो question. Mark this as very important. Illustration 9, page 184. Okay, are we there?
Yes, sir.
An employee Roshan has joined a company XYZ in the year 2011. Okay, so they have joined in 2011. The annual emoluments of Roshan has, as decided, is 14,90,210. Just a second, please. Okay, so the annual emoluments of Roshan has decided is 14,90,210. The company has a policy of giving a lump sum payment of 25% of the last drawn annual salary of the employee for each completed year of service, if the employee retires after completing a minimum 5 years of service. The salary of Roshan is expected to grow at the rate of 10% per annum. Achha, is this 14,90,210 the current emoluments, that is benefits, or is it the benefits after 5 years? Current. The company has inducted Roshan in the beginning of the year and it is expected that he will complete the minimum 5-year term before retiring. So actually estimates that Roshan will continue for 5 years.
Yes.
Thus, he will get 5 yearly increments. The question very clearly tell you how many increments he is going to get. 5 yearly increments, and every yearly increment is how much percentage? Sorry? 10%. What is the amount the company should charge in its profit and loss every year as cost for defined benefit obligation? Also calculate the current service cost and interest cost to be charged in each year assuming a discount rate of 8%, and you have been given the PV factor at the rate of 8%. Okay. So how do you start? अपन notes में separately करते, okay? The solution may be given, but we want to try this. What is the first thing you want to do? Question number 9. What is the first thing you might want to find over here? Benefit attributable to each year of service. Can I say that is 14,90,000 जो भी है into 25%? Why no? 14,90,000 is the current salary. The benefits projected unit credit method. The benefits are payable based on the projected salary. So सबसे पहले you will have to find the projected salary. So over here, point 1, try to find the projected last drawn salary. Projected last drawn salary. What will we write down? 14 lakh 90,000 210 into या फिर प्लस जो भी आपको 1.1 that will give you the salary. नहीं, ये simple interest नहीं होगा, compounding will come. So let us say 14,90,210 is the base salary which will increase into 1.1. So this will become 16,39,231 which will increase by, so can I say into 1.1? कितनी बार करेंगे? Alternatively, can I do directly into 1.1 raised to 5? Are we clear? We have clearly been told that he will get 5 increments. So we are taking that. काफी बच्चे पे argue कर सकते हैं that they might get 4 increments as well. कि 14,90,000 is question has told you 5 increments, 5 increments. Are we clear with this? So what is the number coming up to? It's around 23 lakh 99,990 something. Can I say this is for all practical purposes 24 lakhs? This is an important adjustment. Students usually miss that. They would directly start at 1490. Point 2, benefit at before time value adjustment. Okay, this is benefit attributable to each year's service into bracket before time value adjustment. Benefit attributable to each year of service before time value adjustment, that is 24 lakhs into क्या बोलेगे? What is the plan formula? Look at the plan's formula. What are we promising to pay for each year of service? 25% of the annual last drawn salary for each year of service. So this would be what, 6 lakhs? Now the question is asking you to find the current service cost and interest cost for each year. How will you do that? Benefit attributable to each year of service. Total you will pay 6 lakhs into 5, but we first want to find each year of service so that we can find current service cost. Current service cost is based on service of each year. Okay. But you have to do this for each of the year. So is it advisable to make a table? Yes. So you will have a liability table. What are the columns in this table, if you can guide me? First is year, then opening, then interest, in this case at what rate?
8%.
That is right. Next is what? Current service cost, CSC. Okay, is there any changes, payment or anything? No. So we will directly come to the closing. Year 1. Tell me what is the opening? 0. Why? First year he has not rendered any service. What will be the interest on 0? What will be the current service cost? 6 lakhs is the benefit attributable to the first year service. फर्स्ट ईयर का सर्विस दिया तो 6 लाख का बेनिफिट अक्रू हुआ, but 6 lakhs is to be attributable to each year of service. This is payable after how many years? So this is into the present value factor at the rate of 8% for the 4th year. Do you have this already given? Is it given? 0.73? 4 or 5? 5. So that's 6 lakhs into 0.735. Is there any other adjustment here? No. So this is 4 lakh 41. Tell me what will happen in the second year. Okay, 4,41,000. What will be the interest?
441 into 8%.
280. What about the second year's current service cost?
That is 0.79.
For how, which year? Third year, that is point? 4 lakh. And if I total all of this, 950 to 680. Acha, you want to try on your own for the other 3 years? Where do you think you will land up ultimately? 30 lakhs. 6 lakhs into 5. Ideally, your answer should be 30 lakhs. You can round off if you want, otherwise you can even take decimal. Just verify whether you have got this correct for the third year. Interest of 76,214, 5,14,200 of current service cost, and 1543,094 for the closing balance. This is 6 lakhs into 0.926. ₹22 lakh 22,142 is it? And last में 22,142. This is a little challenging because interest is typically taken as a balancing figure. Otherwise वो 30 lakhs and something या 29 lakh 90,000 something आएगा, तो that's not advisable. You can directly take 6 lakhs over here. And in the last year you can say by if the actuarial assumptions are correct, they will retire, and 25% into 24 lakhs into 5 will be as per the defined benefit plan. This will be the total payment, and hence this total payment will come to what? 30 lakhs. If I subtract this, balancing figure is what? 1,77,000. Are we comfortable with this? Typically, step number 1, find the last drawn salary. Step number 2, find the benefits attributable to each year before time value adjustment. Step number 3, prepare the liability table, and you should be good to go. 3 steps याद रखेगा. Let us review this. Do we get this? Okay, so this is 350, almost the same numbers. Yes, okay, so this is an important working to be addressed. Can we take this example forward? Acha, there are two special things that we need to understand. The first thing, let's take that example forward to a logical conclusion and then we can probably stop for a break. So, we were solving, अभी अपन ये sum के बाहर निकल जाता है. We were solving this example. A normal doubt that would come in our mind is, we are always assuming actuary's assumptions to remain the same. Is it necessary that the actuarial assumptions have to remain the same? No. It's very unrealistic. Like CA का salary 5-6 years back people would have thought CA इतना कमाएगा, अभी लोगों को अलग लग रहा है. Coders देख लो. If your job was on coding and now after the boom that came post COVID, if you were a coder, your salary would go through the roof. So actuary will adjust the salary. If you are an IT company, he would say, "No, yaar, I thought that when the employee retires, it would be a 10,000 salary. No, now I think it will be a 15,000 salary." Are we clear with this? And as a result, your last on salary workings or inflation workings or increment workings or number of years served workings, any of these numbers can change. These are called as changes in actuarial assumptions. So let us say what happens is, you used to approach the actuary in each year. At the end of the first year he said, "No, last one salary will be 10,000." At the end of the second year also he said, "Last one salary will be 10,000," and he gave the workings. But now when you went to him at the end of the third year to do actuarial valuation, because ये सब आपको नहीं आते, actuary को आता है. All of these estimates are called as actuarial assumptions. So you went to the actuary and you told the actuary that, "Well, you know what, sometimes it might happen that you are doing this valuation. You are not going to the actuary. Still, these are called as actuarial valuations only. Valuations which estimates or assumptions for the purpose of liability estimation. Actuarial valuations." So, actuary looks at the present scenario and he says, "Well, you know what? I don't think 10,000 is a good base. 15,000 is a good base for the last on salary." Now, you have done your working at least till the end of the second year as per 10,000. Now let us say what happens is, continuing our example, the actuary in the third year says that his estimate of the last one salary is 15. वो कल उठ के 15 का 7,500 भी हो सकता है, 5,000 भी हो सकता है. So let us say it comes to 15. So according to you, the benefit attributable to each year of service, earlier in our example was 1 by 2 into 10,000 into 1. Is it still 1 by 2 into 10,000 into 1? It is now 1 by 2 into 15,000 into 1. This is what? 7,500. So if I continue the table, in the table year 3 opening balance तो मेरे ledger में जो है वही दिखेगा. In my ledger the opening balance was 7514. अरे बराबर क्या नहीं? So this ledger balance was 7514. Remember, you can unwind, you can record interest on what has been taken as a base earlier. You have found the present value based on जो number उसके ऊपर interest लगेगा, and you went to the actuary at the end of the third year. So interest at the rate of 10% will still be 7514 into 10%. This is what? 751. Achha, now comes current service cost. When you are recording current service cost of the third year, will I still do this 5,000 into 0.8264? I know very much as per the actuary that now each year, that is the third year of service, has given me the benefit which is equal to, for example, 7,500. This is 7,500 into 0.8264. So this is 7,500 into 0.8264 comes to 6198. And based on your workings, this should ideally give you the closing. If I now do the closing, this is what? 14,463. Intuitively tell me, you have done this working multiple times now. Is this the correct answer? Intuitively tell me, is it the correct answer? Yes? Okay, let us try to calculate it. How do you calculate your answer? You will say कि by 1 by 2 into last drawn salary, that is 15,000 into 3 years of service have completed. अरे बराबर क्या नहीं? But this is what? 22,500 payable after how many years? So into 0.8264 payable after 2 years. 3 years have gone by, 2 years are remaining. So this 22,500 into 0.8264. ये tally नहीं हो रहा. Is it rounding off? No. So there is some error. What is the error? No, but what number है? Why is there a difference? Very nice. In the first 2 years, your working was done based on 10,000. But now, if actuary's estimate changes and basically the employee retires with his last drawn salary is 15, I cannot tell the employee कि मैंने सोचा था that your last drawn salary will be 10,000 and hence for the first 2 years take 10,000 के base पे. No, I'll have to pay him based on 15,000 for all the 3, 5 जितने भी साल है. I will have to pay him for that. Now 15 का calculate 25 भी हो सकता है. But I will have to pay him based on whatever is his last drawn salary. But in my working, in the opening balance, if I go to see my opening balance of 7514 must be calculated as if I go to see 1 by 2 into 10,000 into 2 years had gone by into 0.7513 because you are at the end of the second year, that is start of the third year, so 3 years away. You will get this 7514. Yeah, but when the employee retires, your true liability is not based on 10,000. Your true liability is based on 15,000. Think and tell me, can I go back and retrospectively restate what I have recorded in the past? आप ना बोल रहे हो, why no? This is called as a change in accounting estimate. Your estimate of the actuary was earlier के भाई 10,000 होगा, now the estimate is 15,000 will be there. Changes in accounting estimate have to be prospectively adjusted. They can't be retrospectively adjusted. When you will do AS5, you will study that only changes in accounting policies can be retrospectively restated. A change from FIFO to weighted average, etc. They can be retrospectively restated. A change in accounting estimate, and this is very clearly a change in. It is estimate of last drawn salary here. It's not a policy. It is an estimate of the last drawn salary. A change in accounting estimate has to be prospectively adjusted, and as a result, the effect for this will be taken in the third year only. I will not take it in the earlier years. Sir, but how do I calculate? देखो मैं तो actuary हूँ नहीं. How do I आप भी actuary नहीं हो. How do I calculate the gains or losses due to changes in actuarial assumptions? The best method which even people practically do is the balancing figure approach. Sir, ऐसे कैसे balancing figure? Yes, you can take. If you remember in AS11, foreign exchange, foreign currency translation reserve was a balancing figure. You would prepare trial balance and you will say, हाँ ये जो difference है that is due to foreign currency differences. In a similar way, ideally, had the actuary not changed his assumption, आपका आंसर tally होता था. It is not telling because he actually has changed his assumption. काफी बच्चे बैठ के कैलकुलेट भी कर सकते हैं. There are few smart chaps who said कि हाँ ऐसे ऐसे कैलकुलेट होगा. But you can calculate it over here because only one assumption is changing. What if actuary कल उठ के बोलता है कि नहीं नहीं last one salary will be 15,000, employees service will be 7 years. अरे 4-5 चीज चेंज हो जाएगा, आपको समझ में ही नहीं आएगा क्या किधर चेंज हो रहा है. And hence the best way, even at CA final institute does that, even practically people do that, is they say देखो opening plus interest plus current service cost, this should be my answer. But actually my answer is 14,463. 14,463 is not the right answer. The right answer is 18,594. Then why is the difference arising? Because actuary changed assumptions. कौन सा हमको क्या लेना देना? Maybe he changed the last one salary assumption, maybe he changed the discounted assumption, maybe he changed the number of years assumption. We don't care about that. Cumulative difference due to all changes in assumptions will be absorbed over here. नहीं sir, but will I credit the liability or debit the liability? हाँ देखो, currently 14,000 is appearing as a liability. You want to take it to 18,000, so you will have to credit the liability. If you are crediting the liability, something has to be debited. अच्छा, is that interest? Is that due to passage of time? No. Is that due to the current year service? No. It is due to changes in actual assumption, a third line item. Like current service cost was one line item, interest cost was another line item, gains or losses. In this case, it's a loss. Why? Because it is debited. Liability is increasing, P&L is debited, you have to pay more, so it's a loss. It can also be a gain. When sir 10,000 का अगर 7,000 salary हो गया तो it's a gain. So over here, this is a new item, gains / losses on changes in actuarial assumptions. This will be balancing figure. What is that?
4.31.
Sorry. $4131? अच्छा 4131 के वजह से will you increase the liability or decrease the liability? Increase the liability. So this will be to provision. 4131 debit क्या करेगा? Well, loss on changes in actual. Let the reader be aware that this is not due to current year service. Loss due to changes in actuarial assumption. Acha, where will this go? In the P&L. 4131. Acha, sometimes this also happens. Assumptions change because what was happening is earlier you were yourself estimating the liability. So you had some assumptions. Now your company wants to do an IPO समझना? Now your company wants PE or venture capital funding. So you say कि नहीं भाई वो भगवान भरोसे हम जो हमारा खुद का assumption ले रहे थे, let us take the services of an expert. So an expert might estimate and his assumptions may be different from your assumptions. And as a result, you might have said कि भाई 5 years, 10,000. He might say नहीं 10,000 नहीं 15,000. That is still a change in estimate only. Earlier the estimate was done by you, now the estimate is given by someone else, but still at the end of that it is a change in estimate. Like for example, in property, plant and equipment, earlier you were saying कि हाँ this machinery is a life of 10 years. आपको कोई बोला कि नहीं यार एक technical evaluation करवा. You do a technical evaluation and they say नहीं life is only 8 years. That is at the end of the day change of useful life. Change of useful life is changes in accounting estimate to be prospectively adjusted to institute के study material make some है. Where what they have done is they have said that earlier the entity was estimating on its own. From the current year, it seeks the services of an actuary, and based on that, there is an excess of जैसे यहाँ पे 4131. The company wants to spread the 4131 over 3 years, 4 years, 5 years. Is that correct? No. Where should that 4131 go? In the profit and loss account immediately in the year when the assumptions change. The assumptions may change because the same actuary or a different actuary. It may be possible that starting of the year में आपने कोई और actuary पे गए थे, आपको पसंद नहीं आया. You are now going to some other actuary. Ultimately assumptions are changing. अरे बराबर क्या? So over here, this is called as changes in actuarial assumptions to be taken in the statement of profit and loss. Then you will reduce it. In the sense current service cost plus interest cost minus. You will not show it as income, you will show it as a reduction. Are we clear with this? Aja, continuing the above example till the end of year 3. Acha, you are still in that example now. You are continuing in the above example on page number 58. We are just reading what is there. If at the end of year 3, the actuary changes his assumptions on the last drawn salary to 15,000. Then the benefit attributable to each year of service would be 7,500. Does this make sense? Hence, the current service cost as well as the balance sheet liability will be based on the benefit of 7,500 only. However, the opening balance cannot be restated as the changes are due to accounting estimates. You will record it as and when the estimate changes, that is at the end of the 3rd year. The difference in the balance sheet number is due to changes in actuarial assumptions, and hence it should be taken as gain or loss on changes in actual assumptions in the profit and loss immediately. No spreading over years. This is to be recorded to the P&L immediately. You will not spread it over multiple years. So for this we have taken around 4127 or 4131 जो भी है balancing figure. Are we clear with this? Acha, institute has not given you any sum which involves the calculation of this. However, let us review illustration number 6. There's no calculation involved, but let us review illustration number 6 on this, page number 182, illustration number 6. Now, Omega Limited belongs to the engineering industry. The company received an actuarial valuation for the first time for its pension scheme. Actuarial valuation means valuation from an actuary. For the first time for its pension scheme, which revealed a surplus of 6 lakhs. So, as compared to your estimate of the liability, let us say you are estimating that your total liability is going to be 66 lakhs. Based on your assumptions, you went to an actuary. Actuary says, "नहीं, मेरे हिसाब से 60 lakhs." So there is a difference of 6 lakhs. In fact, there is a surplus of 6 lakhs. According to you, what should happen to that 6 lakhs? What is the nature of that 6 lakhs? Is it current service cost? Is it interest cost? What is this? Changes in actuarial assumption. Where should it go? P&L. अच्छा, यहाँ पे will you show it as other income? No, you will show it as a reduction from your current service cost, etc. So in an employee benefit expense, current service cost plus interest cost less, gains on changes in actuarial assumptions. It wants to spread the same over next 2 years. Is that permitted? Not permitted. By reducing the annual contribution to 2 lakhs instead of 5 lakhs. So we are saying 6 lakh का gain है, तो 3 lakhs over the next 2 years. That's not permitted. अभी वो कहाँ से 5 came, कहाँ से 2 आया, हमको लेना देना नहीं है, वो permitted ही नहीं. The average remaining life of the employees is estimated to be 6 years. So be it. So काफी बच्चे यहाँ पे बोलते हैं कि चलो we will spread it over 6 years. You don't spread it over 2 years. You don't spread it over 6 years. You record it in the year when the change happens. You are required to advise the company on the following items from the point of view of finalization of accounts, taking into note the mandatory accounting standards. So according to AS 15, employee benefits actuarial gains or losses should be recognized immediately in the statement of P&L as income or expense. Therefore, surplus of 6 lakhs is to be credited to the P&L of the current year. They're saying credited means journal entry mein to credit aayega. How you present it is later, but in the journal entry there will be a credit. So over here you can just briefly explain what seems to be the case over here, because बच्चे देख के समझ नहीं पाते what this is. We'll just give a reference note what this case appears to be. Write down reference note. It appears that the company was valuing the liability Where did we end? Sorry. Internally, based on its estimates, and now is taking actuarial valuation. Full stop. The difference seems to be the difference seems to be due to different assumptions used by the actuary. And hence should be taken in the P&L. In the year when the assumptions change. In the year when the assumptions change. Okay, and now you go to the last part over here. This is regarding past service cost. Now this is a thing now which is a little more tricky. What do you mean by past service cost? Acha, what was your original plan? Your original plan was 1/2 into last drawn salary. Please pay attention. 1/2 into the last drawn salary into completed years of service. बराबर से सुनेंगे. Is it possible that in the 4th year the company itself changes its plan? Is it possible that the company itself changes its plan? Like for example, the company says, I want this to be more rewarding for my employees, and hence instead of 1/2 into the last drawn salary, I want to make it as 3/4 into the last drawn salary. Acha, is this a change in actuarial assumption? Is actuary changing his assumption, or is it a change of fact? It's a change of fact. It is not a change of assumption. Your employee ko when he retires, how much will his be salary? That is an estimate. This is not an estimate. This is an actual plan. It's an actual legal document which earlier was saying 1/2 into the last one salary. Now it is showing 3/4 into the last one salary. This is called as a plan amendment. Now this plan amendment can happen in two ways. It can go from 1/2 into the last one salary to 3/4 into the last one salary. Is this a change which is beneficial to the employee or adverse to the employee? Beneficial. You are getting more. So I will have to pay more to the employee. Or the change can be the other way around, where I go from 1/2 into the last one salary to, let us say, 1/4 into the last one salary. In which case, instead of giving half of the last one salary, I am giving only 25% of last one salary. Is that beneficial to the employee or adverse to the employee? Adverse. इसको अपन बोलते हैं curtailment. Treatment for both remains the same. One is called as past service cost, where your past service will now be due for more benefits. And one is called as curtailment, where your past service will be due for lesser service. Effect remains the same. Acha, what happens in this case? For example, in the 4th year, this plan change happens. So, till the 3rd year, there was no such change. Let us say, अपना जो पहले का closing कितना था 18,594. Let us say continue with that 18,594. How was 18,594 calculated, sir? This was calculated as 1/2. Sorry, into 15,000 into 3 years into 0.8264. The plan got amended at the end of the 4th year. So over here you will say interest at the rate 10% still 1859. अरे बराबर कर लें. This is 1859. There is current service cost. Benefit attributable to the 4th year of service. Is it still 7,500? Benefit attributable to the 4th year of service. Is it? Why no? The plan is amended, and hence the benefit attributable is 3/4 into 15,000 into 1. So this is what? 15,000 divided by 4 into 3. This is 11,250. So for the 4th year of service rendered, the benefit is how much? 11,250. But this will be payable after how many years? 1 year. So 0.9091. 10,000 227. Has the actuary changed any assumption in the current year? No. So ideally your closing should tally. There is no gain or loss on changes in actuarial assumptions. This is what? 18,594 plus 1859 plus 10,227. 30,680. Your total should tally. Think and tell me, will it tally? Why no? Because your opening is calculated based on this 1 by 2 number. But if I sit and calculate the liability at the end, this is 3 by 4 into 15,000. Till date, how many years are done? 4 years. So ideally my liability should be 15,000 divided by 4 into 3 into 4. 45,000. But this 45,000 is payable after 1 year. 0.9091. And hence my answer should be what? 40,910. So my number is not telling. So काफी बच्चे बोलते हैं यहाँ पे भी बैलेंसिंग फिगर ले सकते हैं. In my opinion, yes. But then one step ahead, it is not there even at CA inter or CA final. But one step ahead, a student can also argue, okay, sir, how can we have two balancing figures? If actuarial assumption had also changed and this event had also happened in the same year, then you can't take two balancing figures. Yes, then आपको दो में से एक निकालने को आना चाहिए. Then you will always know how to calculate this. And actual gain will still be a balancing figure. Why is this difference arising? Is it arising because actuary has changed its assumptions? No, but it is arising. Listen to this carefully. Because the last 3 years of service were recorded at 1 by 2. 1 by 2 का LCM करे तो 2 by 4 हो जाता है. 1 by 2 is the same as it was recorded as 2 by 4 of the last drawn salary. However, now the benefit till date is based on 3 by 4 of last drawn salary, which means the last 3 years. Sir, why last 3 years? All 4 years? No, fourth year already is recorded based on 3 by 4 ka formula. The last 3 years which are accounted for based on 1 by 2, that is 2 by 4, is increasing by 1 by 4 to make it 3 by 4 of last drawn salary. So the service rendered in the past is now going to give you an additional benefit. And hence this is called as past service cost. So sir, can we retrospectively restate it? No, it's not a change in accounting policy. It is a change of fact. It is not even a change in accounting estimate. It is a change of fact, and actual fact is changing, but it is changing in the fourth year. Then why should year 1 to 3 bear any brunt of that? Year 1 to 3 mein to the plan was 1 by 2 into last drawn salary only. It is because of the fourth year ke plan by change ho raha hai. And hence the brunt has to be borne by the fourth year only. And as a result, you will try to calculate something called as the past service cost. How will you calculate the past service cost? One option is you calculate as a balancing figure. But if there is actual gain or loss as well in the same year, हाँ भाई तो फिर इतना आएगा नहीं detail में. But then two balancing figures you can't find. Then how will you find? Sir, we will say 3 by 4 minus 2 by 4. This is the additional benefit. Into 15,000 into क्या बोलेगे 3. काफी बच्चे बोलते हैं सर 4 होना चाहिए in the fourth year. No, because 11,250 which is the fourth year is already based on 3 by 4. So the adjustment will be done only for the earlier 3 years. So the earlier 3 years which were accounted for at 1 by 2 into the last drawn salary will now be accounted for at 3 by 4, that is 1 by 4 का increase into, but ये भी payment तो जाएगा after 1 year only. And hence if I multiply this 10,000 around 10,227. Achha, if I were to pass the journal entry, this will be called as past service cost account debit to provision. Past service cost will go to the P&L 10,227. 10,227. This is coincidentally same. It is not always the same. It is coincidentally the same. The numbers are such. Don't confuse this. Achha, the other way around, there could have also been a curtailment. In case of curtailment, instead of going from 2 by 4, I went to 1 by 4. In which case your closing balance will not come to 30,000. It will come to probably 25 or something. तो वापस वो गड़बड़ अपने को difference निकालना पड़ेगा. That is called as curtailment. Curtailment is again. Curtailment means benefits are reducing. Are we clear with this? Past service cost means benefits are increasing. Are we clear with this? Is everyone clear? Acha, now comes another challenge. So my sympathies are with you. But now comes another challenge in past service cost. Past service cost can be of two types. Past service cost can be for vested benefits, or past service cost can be for non-vested or unvested benefits. What do you mean by vested benefits? Vested benefits means the past service cost is vested, which means if the employee decides to resign, immediately he will still get 3/4 into last round salary के हिसाब से ही. That means vested benefits, immediately vested. If I want, I can leave the company now. At the end of the 4th year, I will still be entitled to the new plan, that is 3/4 into last round salary into completed years of service, in which case the entire 10,227 will go to the P&L as we have done till now. But what if they are non-vested benefits? Sir, what do we mean by non-vested benefits? Like the organization says कि देखो, I continue with my promise to pay you 1/2 into the last round salaries. अभी क्या हुआ है? Let us say in my organization, a lot of people are leaving the company suddenly. I want people to stay in the company. I say कि देखो, if I promise you to pay 1/2, I will pay you 1/2. I am sweetening the plan, but I will sweeten the plan only if you continue for 2 years. So if you continue for 2 years, then you get 3/4 into the last round salary. If you leave immediately, you get, or you continue for 1 more year, जो भी आप लो, you continue for 1 or 2 years, whatever it is. So if you continue for the 4th and the 5th year, I will give you 3/4. If you leave in the 4th year itself, I will give you only 1/2. This is called as non-vested. What do you mean by non-vested? If I leave immediately, I will not get. But if I continue over whatever is the promised tenure, I will get 3/4. Now what does an actuary do? An actuary does his estimate. Actuary को accounting के साथ कोई लेना देना नहीं. An actuary does his estimate. He thinks that this employee is going to in any case continue for 1 more year. So he will be entitled to 3/4 into the last round salary. So when I go to the actuary in his certificate, he will say कि भाई तुम्हारा actuary in the certificate will say 40,910 is what you have to pay. So your actuarial liability will appear at 40,910. Are you understanding? Because an actuary does not care कि भाई here he is saying that my employee is going to continue for the next year. So he is going to get 3/4. But books of accounts will say ये तो सही नहीं है. If the requirement very clearly is that I have to serve in the current and the next year, then to book the entire 10,227 in the current year is not appropriate. Are we clear with this? तो यहाँ पे थोड़ा एक चैलेंजिंग सिचुएशन आ जाता है. बट माई एक्चुअली सर्टिफिकेट इज शोइंग 40,910. So in my balance sheet, I'll have to show the liability 40,900 because an auditor will say मेरे को दिखाओ एक्चुअली सर्टिफिकेट क्या बोल रहा है. एक्चुअली सर्टिफिकेट इज सेइंग 40,900. बट बुक्स ऑफ अकाउंट्स हैव दिस चैलेंज. जैसे कि भाई मेरे को अगर 40,910 पे आई हैव टू रीच, देन आई हैव टू डेबिट द पास्ट सर्विस कॉस्ट बाय 10,227. तभी तो डबल एंट्री बैठेगा. अरे यस और नो? Institute says no. You don't necessarily have to do that. This is if there is vested, then this is a journal entry. However, if it is non-vested and the overall vesting period is 2 years, that is year 4 and year 5, then Institute says देखो year 4 तो हो गया, year 5 बाकी है. Then your journal entry, please pay attention, will be past service cost account debit. Where will the past service cost go? P&L. You will create a new ledger called as unamortized past service cost, which जैसे prepaid expense होता है ना, which will appear in the balance sheet. This will not go to the P&L. Unamortized past service cost, no, it will not go to the P&L. Unamortized past service cost account debit to, यार liability तो मेरे को actuary के साथ meet करवाना पड़ेगा, to a provision. Sir, what is the provision over here? Well, provision over here has to be increasing by 10,227. Otherwise, my liability will not appear at 40,910, which is what my actuary is saying. But in my P&L, what will I take? I will take only 10,227 into 1/2. 1 year has passed. So this is 10,227 divided by 2. For example, this is 5,113 or 14. And the remaining 5,113, let us say, will be unamortized past service cost. Are you clear with this? Sir, बहुत confusing है. How will this appear in the P&L? How will this appear in the balance sheet? What will be the presentation? So, for example, if this was a non-vested example, please pay attention. Over here, when you look at your P&L will comprise of interest cost. अच्छा डबल एंट्री कर लेते हैं. Let us say your liability. In your liability, your opening liability was appearing at 18,594. बराबर क्या नहीं? Double entry says you will first add the interest. Entry is interest account debit which goes in the P&L to liability. 1859 double entry 1859. Second current service cost. Journal entry क्या है? Current service cost account debit to liability. Number क्या है? 10,227. 10,227. Current service cost 10,227. Third entry is past service cost. So when I look at past service cost, you will say past service cost amortized. In the current year, how much is amortized? 5114. But for calculating the liability, how much will be the past service cost? 10,227. And hence if I total up, my number should match with the actuarial valuation number 18,594 plus 1859 plus 10,227 plus 10,227, that is around 40,907 approximated. And यहाँ पे कितना आएगा? 1859 plus 10,227 plus 5114. This is 17,200. But your balance sheet will not tell you. बराबर का नहीं? Your balance sheet will not tell you. Why? Because there is still some unamortized past service cost. If I open my balance sheet, in my balance sheet now two things will appear. There will be a liability which is appearing at what amount? 40,907. And then, so this is liability. Similarly, unamortized past service cost, will it have a debit balance or a credit balance? Debit balance. So this is unamortized past service cost. Next year you will write it off. Your journal entry in the next year will be year 5 में past service cost account debit to past service cost account debit to unamortized past service cost. It will go to the P&L. फिर वापस in the liability you will not take 51. Sir क्यों? अरे because in the liability you have already taken 10,227. You already taken the effect of 5113 and 5114 already. So in the next year, year 5, your journal entry will be past service cost, which will go in the P&L to unamortized past service cost. So ultimately 10,227 goes to the P&L. But over 2 years, in the liability it goes in the year when the actuary says it goes. Are yes or no? So यहाँ पे unamortized past service cost will appear at 5113. बट देखने को ऐसा दिखा सकते हैं, बट इंस्टीट्यूट का आपका लाइफ इतना इजी जाएगा नहीं चलेगा. जैसे कि नहीं, ideally a debtor can be shown on the asset side and a provision for bad debt can be shown on liability side. Do you do that? No, you reduce and you show the net amount. Like your PPE can be shown at cost on the asset side and provision for depreciation can be shown. But इसे दोनों एक दूसरे के लिए ही बने हुए. And as a result, rather than showing unamortized past service cost on the asset side and liabilities, I will net them off. And hence in my balance sheet I will show this as liability minus unamortized past service cost. This is 5113 and hence your net amount. तो कान सीधा के बदले ऐसा ही पकड़ा हुआ है, बट अभी जो है वो है 40,907 minus 5113 which is 35,794. In the next year your journal entry, so in year 5 all else remaining constant, your journal entry will be past service cost 5113 to unamortized past service cost 5113, which means ये निकल जाएगा. And P&L के अंदर जो 5113 जाना चाहिए था, it will go. So it is, I mean, Ind AS does not prescribe this. They realize that this is illogical. But AS is still having that. So आपको तो अभी AS पढ़ना है. And hence in accounting standards, this is still there. Ind AS does not advocate such weird and illogical tree. I mean, illogical mean गोल घूम के तो 35 पे बता रहे हो ना. So at the end of the day, if you want, if you could have always said कि भाई एक काम करो, you pass the entry at 5114 only, then answer directly 35,000 आ जाता था. But they said no. You have to record the unamortized past service cost, bring the liability to 40,000 and then show that unamortized past service cost, sir, but वो debit आएगा. हाँ तो you reduce it. So कान उल्टा पकड़ के अपन पहुंच रहे उधर ही है. Are we clear with this? Opening of the liability is still 40,910. It is still 40,910. Are we clear with this? Yes. Okay. Continuing the above example, if the entity amends the plan in the 4th year and revised plan is 3/4 into the last run salary into completed years, then the benefit is attributable to each year of service will be 11,250. Okay, we have discussed this. The current service cost and balance sheet liability should be based on the revised plan. The balancing figure is past service cost and this should be taken in the statement of P&L in the year when the plan is amended in case of vested benefits. It goes to the P&L entirely only in case of vested benefits. In case of unvested benefits, we will spread it over the vesting period. Okay, like opening, so this is for vested, let us say. Unvested, I have given you that note. Acha, and this working and the answer gets done. Let us say we go to the 5th year. अभी और कुछ नया ट्विस्ट नहीं ऐड करेंगे, सीधा साधा 5th year फिनिश कर देते हैं. So let us say we go to the 5th year. In year 5, what is your opening balance? 40,910. What will be the interest on that at the rate of 10%? But ये usually balancing figure ले लेते हैं. Current service cost will now be 3/4 into 15,000 into 1 comes to what? 11,250. Is there any actual assumption? No. Is there any past service cost adjustment? No. And hence your closing should ideally tally. यार but closing होना क्या चाहिए? 3/4 into 15,000 into 5. So this is 15,000 into 5 into 3/4 comes to 56,250. Sir, but then interest balancing figure 11,250 and 40,910 4090. For all practical purposes, it is the same. अगर आप 10% निकालते तो 4091 आता था. अच्छा, and then when the employee resigns, you will pay 56,250. Acha, so what will be the journal entries in the 5th year? In the 5th year, please pay attention. You will have interest account debit 4090, current service cost account debit 11,250 to provision. जो भी total आएगा 4090 plus 11,250 15,340. Is there anything else that we have missed out? Yes. Past service cost. Past service cost to unamortized past service cost. So 5113. This will also go to the profit and loss account. So your unamortized past service cost becomes 0. In the P&L, what has gone is 4090, 11,250 as well as 5113. 5114 has already gone. Yes. And hence your provision, which is now at 56,250, will be paid. Your entry will be provision account debit 56,250 to bank. There is no open account, everything is closed, and you can stop for a very well deserved break. Right? Okay. So we'll stop for a break and then continue further. Chalo. We'll go further into AS15 employee benefits. So we are largely done with the workings in case of plan liabilities. Now, can there be plan assets? What do you mean by plan assets? Plan assets are earmarked, that is dedicated assets which are used for the purpose of meeting plan liability. What do you mean by earmarked? Earmarked means ring fenced. They can be used only and only for the purpose of meeting plan liabilities. So how do people do that in practice and what does it mean? So let us say you are an employee of a company and of a company like Coca-Cola or General Motors. Now these are mass employers. I mean they have millions of employees. Now for them, they have to pay their retirement, pension, gratuity. There is a lot of money to be paid. Now the problem is, do you think Coca-Cola keeps everything के भाई जब भी retire होगा तभी बंदोबस्त करेंगे? Or do you think they are arranging the money beforehand? Beforehand only. And as a result, if they are arranging the money beforehand, then they must be investing in certain assets. Usually most of those assets are like government bonds. They are very safe assets, because if you invest the company's money in Shark Tank, for example, employees' money in Shark Tank, employees would say, "Bhai, if the investment does not do well, where will I get my retirement funds from?" So to give an assurance, they invest it in typically very safe assets, and hence the discount rate is usually the government bond rate usually. So what we are trying to say is, there is plan liability and then there is a plan asset. What is a plan asset? It is earmarked and dedicated assets which are for the purpose of meeting the plan liabilities. Now the question arises, how do you calculate, or what is included in these plan assets? Usually these are safe assets. Investment in bonds, debentures, government securities, etc., etc. Can also be investment in equity shares if it is permissible. But an important feature is, these assets are available for the purpose of payment to employees and employees only, and no one else. What does that mean? It means that अगर कल उठ के liquidation होता है, then usually in liquidation you may have to pay money to debenture holders, to creditors, to lenders. These assets cannot be touched by them. They can be touched for the purpose of employee payments and employee welfare only, and for no other purpose. How do you do that in practice? You usually set up something called as a trust. Trust suna hai apne? You set up a trust, and in that the trustee is the company as well as the employees, union representatives, etc., and the beneficiary are the employees only. So every year what will happen is, the company will contribute some amount. कैसा लग रहा है 300 करोड़ ये टाइम करना है, it will contribute 300 crores into the trust. The trust will buy investments, and trust is a separate legal entity from the company, and the beneficiary of the trust is an employee. This is just for your knowledge. In which case, कल उठ के if lenders say कि भाई you have to pay me money, the company does not have enough money, still the lenders are not beneficiaries in the trust, and as a result they will not get access to these assets. These are ring fenced, earmarked for the purpose of employees only. Such types of assets are called as plan assets. If you don't have this trust structure, or it is not earmarked, it is an asset appearing in the company's balance sheet. If it is the asset appearing in the company's balance sheet, that asset can be used for any purpose by anyone. हमने रखा था एम्प्लॉय के लिए, बट मूड हुआ तो चलो बेच दिया, and you can use it for your general corporate purposes. But assets which are earmarked, dedicated for the purpose of employee welfare, cannot be used for any other purpose other than employee welfare. Are we clear with this? And as a result, these types of assets are called as plan assets. Now again, it is a task to manage such plan assets, to ensure that I make enough contributions, to ensure that I sell it at the right place, right time. It is a headache. Now I am a small business, I don't have enough time to manage all of this. So what a lot of companies, especially in countries like India, do is, they buy insurance policies. They go to insurers like LIC, for example, and they say that, well, you know what, there's my employee to whom I have to pay a pension. Abhi pension ka planning kabhi kitne saal karna, it's very difficult for me as a small business to do. So I tell LIC that I have this employee who is going to turn 60 after so many years, and after that I have to pay his pension. Annuity bolta. I will keep on doing contributions, you ensure that you make me payments, and those payments I will hand it over to my employee. So I don't have that headache to manage those plan assets. LIC is doing that. But again, if LIC is unable to pay, then I will have to pay. It's a defined benefit plan, by the way. But I am paying for an insurance policy. So your earmarked assets, plan assets, can be bonds, debentures, etc., or it can be qualified insurance policies, but they are available only for the purpose of paying employees. Are we clear with this? Now, like in plan liabilities, we said, why would plan liabilities change? We said, sir, due to interest, due to current service costs, due to past service costs, due to changes in actuarial assumptions, etc. There was one thing that we missed. I mean, we did not miss, but we did not write it explicitly, is when the employee retires, when this employee retires, it will go up from, let us say, 40,000 to 56,250. And then when you pay 56,250, it will be liability account debit to bank. So less benefits paid. You are opening plus and karte karte last mein zero aa jayega. So less benefits paid. So liability will come down when the benefits are actually getting paid. Or liability can come down if there is a curtailment, for example. Are we getting this? why would plan assets change? And what is there in the plan assets, sir? This can be investment in debentures, investment in bonds, investment in equity shares. During the year, why should investment in plan assets change? If at the start of the year, let us say we take our original example, जो अपन ब्रेक के पहले लगे हुए थे. If we take that example, in the first year, as per AS 15, we believe that the expense is 3415. We say काम करते हैं, let us contribute 3000 into a fund. Every year we will contribute something, and slowly it will come up to 25,000. So suddenly I don't bear the burden altogether. So I make some contributions. At the start of the year, I had no plan assets. By the way, I did not have any plan liabilities also. But during the year, so let's say plan assets, are they actually assets? Yes. Acha, you will have some opening over here. Let's say opening is 0. तो उसके ऊपर कुछ इनकम भी नहीं कमाया होगा. Why will this plan assets increase? Sir, it will increase due to contributions. What is the journal entry when I make the 3000 rupee contribution? Your journal entry would be plan asset account debit to bank. The money is given to the trust can invest wherever it wants, and hence it is plan asset account debit to bank. Sir, इसका क्या significance है? अरे, if this was a defined contribution plan, the entry would have been contribution expense account debit to bank, because in a defined contribution plan, the contribution is the expense. But in a defined benefit plan, contribution is not the expense, whether you do contribution or you don't do any contribution. Your ultimate liability is 25,000, you have to prepare to be paying that, whether you have done contribution over the years or you have not done it. Are you understanding it? So contribution is not an expense, it's more of an investment. You are investing. आपको समझ में आ रहा है? So over here, this is opening to which you will add contributions. Plan asset account debit to bank. So your closing plan asset would become 3000. For example, your closing plan assets would become 3000. For example. Achha, why would plan assets change? One is due to contribution. Is there any other reason why plan assets would change? Like, why would plan liabilities change? Well, plan liabilities will go down when benefits are paid. In a similar way, plan assets will also go down when benefits are paid. Sir, क्यों? अरे, because when the employee retires, I have to pay them 25,000. But 25,000 आएगा कहाँ से? By and large, by selling these plan assets. So I will sell the plan assets, generate 25,000 and pay that to the employee. So my plan assets will go down by around 25,000 or whatever money I am using out of the plan assets to pay off the liabilities. So one reason for the plan assets to go up is a contribution during the year. One reason for the plan assets to go down is the benefits paid. Is there any benefits paid during the year? Is there any benefits paid during the year? In the first year, no. Second, third, fourth, acha, in the fifth year, at the end of the fifth year is benefits paid? Yes, but in the first, second, third, fourth year, no benefits are paid. So this should ideally continue to be at 3000 only. Now, before we proceed further, two very interesting and important points that we need to discuss here. First is, if it is plan assets, where should it appear? On the asset side of the balance sheet or on the liability side of the balance sheet? Assets. However, in case of plan assets, ICAI, AS15, even Ind AS mandatorily requires you to show the plan assets as a reduction from the liability. Usually क्या होना चाहिए? Ideally your balance sheet should appear something like this. Your plan liability comes at 3415 and your plan assets come at, let us say, 3000. Are you getting this? But instead of showing this, AS15 says that in your balance sheet your assets should be netted off from the liabilities and the net liability of 415 should only appear in the balance sheet. What is the rationale for that? The rationale for that is, generally these plan assets, भले as a student आपको लगता है कि ठीक है यार plan assets, they are humongous. For a company like Coca-Cola, without exaggeration, if Coca-Cola, for example, it has a much bigger asset base, but if Coca-Cola has 10,000 crores worth of assets, of operating assets like factories, delivery vans, etc., it has more than 15 to 20,000 crores worth of plan assets. For a company of that size, its operating assets are actually lesser than its plan assets, including companies like General Motors, etc. Their operating assets are lesser than their plan assets. So if you show it like, sir, क्यों? अरे भाई, 15-20 lakh employees, imagine the kind of gratuity you have to pay them, imagine the kind of provident fund you have to pay them, imagine the kind of pension you have to pay them. Imagine the kind of funds you need for so many employees. And as a result, it is humongous, on an average 1.5 to 2 times of the company's core operating assets. हाँ तो सर होने दो. If you put it on the asset side, when you study FM, you will see there are certain ratios called as return on asset ratios, asset turnover ratio. पूरे अफेक्ट हो जाएंगे. People say, अरे यार ये तो क्या अच्छा परफॉर्म. अरे अच्छा, this money is not invested in the business in the first place. If you show this 3,000 on the asset side, your total assets will be higher. Your asset turnover will change. But वो तो आपने धंधे में पैसा डाला ही नहीं है. You have not put that money in. So why should it affect the total assets ratio? So to avoid that confusion, we say कि भाई ठीक है, काम करते हैं, let's reduce it from the liabilities. In any case, the objective of this asset is to exclusively meet the liability only. Yes or no? Second, why is 415 actually the right number and not 3415? कल उठ के if this amount has to be paid, out of the 3415, 3000 is secured. The remaining 415 I have to arrange from the company's resources to pay. So rather than showing and scaring the people, debt to equity ratio, by showing 3415 worth of liability, अरे 3415 में से 3000 तो is earmarked, dedicated. I can't use it for anything else. So my true liability exposure is 415 and not really 3415. And as a result, the standard over here says that your disclosure in the balance sheet will be your liabilities minus the plan assets, and the net 415 will only appear in your balance sheet. Not 3415 separately as asset, not 3000 separately, not 3415 as liability and 3000 as asset, no. Only the net amount will make it to the main balance sheet. Otherwise, ये सब notes में disclosure में it will come. Point number 1. Point number 2. Usually, these are plan assets. These are like investments. Usually, investments are shown at what value? Usually shown at cost. Usually, when you study AS13, you will see that investments are usually shown at cost. अच्छा, so ideally यहाँ पे भी investments है, they should be shown at cost only. Ideally, yes. But this is the only place in your entire accounting standard framework where institute puts aside conservatism and prudence and it goes to realistic accounting. It says, देखो यार, I can show the asset at cost. However, what will happen is, let us say hypothetically, इतना difference आएगा नहीं, ये तो सिर्फ आपको समझाने के लिए है. Let us say your liability is, for example, 1000 rupees. You have contributed plan assets a lot of years back, worth 100 rupees. So the cost is 100. You have seen companies like Adani etc. वो 5 10 गुना बढ़ गए. So you had invested in companies which have gone up significantly. So the cost of the plan assets when it was invested was 100 rupees and the fair value of these plan assets, for example, was 1000 rupees. As per AS13, these investments will appear at cost. You will not say, bhai, ye to unrealized gain. Prudence and conservatism says, till the time you sell this, how can you record 900 ka gain? 1000 minus 100. When you record this, we will say, chalo, AS13 has to be followed on investments, in which case this will be at cost and hence I will show 900. इसको अपन बोलते हैं deficit. Deficit meaning this is the money which is yet to be provided. A trade union समझते? Trade union sees this as the first thing when they open the balance sheet कि भाई कंपनी ने हमारे rights के लिए have they kept aside enough money? When a trade union sees this, they would be livid. They would say कि भाई हमारा 1000 का liability है, 1000 liability, and the company has kept aside only 100 rupees. 900 rupees is भगवान भरोसे. And as a result, strike होएगा, management and labor का unrest, there will be a lot of issues. Now, as a matter of fact, they will force the management कि अब दूसरा contribution करो, give 900 to the, but is 900 actually needed? No, the plan is adequately funded. It is not in deficit. But because you followed prudence and conservatism and showed everything at cost, it is appearing that your plan is unfunded, and that can have big organizational disruptions. And to prevent or avoid that, the standard says कि भाई we understand that you have to show it as at cost, but if you show it at cost, management practically will not make additional contribution. Someone can always say कि भाई notes में explain करेगा. आपको लगता है trade union notes देखने वाले? they are probably not going to see all of that in your explanations. Before you explain that, दो चार जन के सर टूट गए होंगे. So that ways people cannot afford. And as a result, we say कि भाई ठीक है, this is an item where I want you to show the true picture. If the fair value has gone up, so be it. If it has gone down, so be it. It is not at cost. It is not at cost or fair value, whichever is lower. It is to be shown at fair value. It is the only item in all your 29 standards where any asset is required to be shown at fair value. PP वगैरह में भी choice होता है. यहाँ पे there is no choice. You have to show it at fair value. So two important points for plan assets. First, they should be reduced from plan liabilities and only net amounts appears. And while reducing from plan liability, the fair value of the plan asset needs to be reduced. तो उससे क्या होगा? Okay, over here the fair value of the plan assets is 1000 and hence this will come to 0 and that will show the true picture. The company need not make any further contributions. Are we clear with this? But then there is a problem of double entry system of accounting. If I had to do all of this, let's say I proceed further with my original example. There is a problem in the double entry system of accounting. So what will happen? Let's say if I go to year 2, there will be my plan liability. There will be my plan asset. Acha, let me put it this way. Asset niche, liability upar. And then there is some expense that has to go to the P&L. I hope you remember broadly the numbers that we did. Otherwise, you can refer that separately as well. In year 2, your opening liability was 3415. Are barabar kya nahi? Your opening plan asset that we just discussed is 3000. Acha, then you said that there is an interest cost at the rate of 10%. This is 342. This interest will come over here 342. Are barabar kya nahi? Apart from that, there was some current service cost as well. I think 3757 or something. जो भी है, let's say this is current service cost again of 3757. Are we clear with this? Acha, and there was nothing else. There was no payment or nothing of that sort. And as a result, your closing should have come to 7513 or 14 as the case may be, and that was your closing liability. Are barabar kya nahi? Now on the assets front, your opening fair value of plan assets is 3000. Will this also change? At the end of the year, you need the closing fair value. What is the closing fair value? Well, you will have to go to the market and see what the closing fair value is. But before that, you will see if there are any contributions additional. Let us say during the year, another 3005 of contributions are done. Plan asset account debit to bank. You will see if there are any benefits paid. In the second year, did any employee retire? No. So ना यहाँ पे है ना यहाँ पे कोई benefits का कोई requirement नहीं था. There was no employee who had retired. So no benefits paid. If the employee had retired, I will usually use the plan assets to pay off the liabilities. Okay. Now comes a slight dilemma. There is a problem and institute जो सीधा चीज होता है उसको भी बहुत complicate कर देगा. So over here, what do you guys think? Will your closing fair value necessarily be the same? Let's say contribution is done at the end of the year. This is year to end. It can also be done at the start. For simplicity, let us assume this is done at the end of the year. Now, the closing fair value, let us say, क्या लेना है? Let us say this comes to 6800. Is it possible? Mathematically, is it tying up? Is there a difference? या फिर एक काम करते हैं, this is, let's say we take it at 6850. Is it mathematically tying up? No. Is there a difference? What is that difference? 350. What do you think that difference represents? It's a balancing figure. Perfect. It is actual return on plan assets. Return is a very wide term. आप बोल रहे हो increase in fair value. That is not the only thing. It is possible that you have invested in bonds and the bonds are going to give you interest. If the bonds are used for employee welfare, the interest on the bonds will also be used for employee welfare only. So I have 3000 invested in bonds. That bond gives me, for example, 300, 200, 250, whatever it is as actual interest. That I can hold as cash or I can invest it in a new bond, whatever. But that money is also a part of the plan asset. So interest, dividend, all of these are a part of, or I might sell a bond. I've invested at 3,000, I sell it at 3,100, I make a 100 rupee capital gain. Are barabar ke nahi? So this is called as actual return. But then I can't just look at a one-sided thing. I will say, ke bhai, what does actual return comprise of? This is called as actuarial return. What does actual return comprise of? When you calculate actual return, does it comprise of interest on plan assets? Does it comprise of dividend on plan assets? Does it comprise of realized gain or loss on plan assets? Does it comprise of unrealized gain or loss on plan assets? Should it comprise of unrealized gain or loss on plan assets? Why? Yes? That is right. Because we are recording at fair value. So even if there is any unrealized gain, let us say this was a zero coupon bond. You understand zero coupon bond? Zero coupon bond means it does not give you any coupon, any interest, kuch bhi nahi de raha. But you can buy it at a discount. So let us say during the year there was zero interest, zero dividend, no sale. But at the end of the year the bond was worth 6,800. So maybe the bond appreciated in value by 300. So do we consider unrealized gain or loss? Usually we don't, because we have to show it at cost. But if you are showing it at fair value, double entry, if investment has to be increased, something has to go somewhere, double entry, return has to be recorded. So will I include only the realized or also the unrealized gains or loss? Also the unrealized gain or loss. However, it is possible to manage these plan assets. I have to incur certain expenses, maybe administrative expenses, maybe fund management expenses, maybe I have to pay some taxes. That will eat up my return. If I have generated 350 as coupon, but I have to pay 50 rupees to the fund manager who is managing this fund, my net return is only 300 rupees. And as a result from this, I will subtract expenses which are directly attributable or taxes. ये सब जोड़ जाड़ के probably 350 आता रहेगा. This is actual return. Usually actual return is calculated as a balancing figure. Are we clear with this? Yeah, but ये तो see contribution, sir, we know the entry. This is plan assets account debit to bank. Company का bank balance कम होएगा and plan assets. For benefits there will be two entry. Bank account debit to plan assets and plan liabilities account debit to bank. Net, your liability will go down, your asset will also go down. It is liability account debit to asset. Yeah, but what will be the journal entry for actual return? In this case, actual return is positive. It can be negative as well. If it is 350, your entry will be plan asset account debit. 350. तकलीफ क्या है? Where will you credit it? So it has to go somewhere. कुछ तुक्का मारो. Where should it go? Will you create a liability for it? Achha, first, will you create a liability? Do I owe that 350 to anyone? No. So does it make sense creating a liability? No. What is it? Actual return, what is it? It is at the end of the day income. It is at the end of the day income. Where does income go? Profit and loss. So where should this go? इतना क्यों डर रहे हो? अभी अपना कॉन्फिडेंस ही निकल गया कि यहाँ पे क्या हो रहा है कुछ समझ में नहीं आ रहा. So where should it go ideally? P&L. It's income at the end of the day. If I had invested in a bond and the bond gave me a return, that is income. Whether it is interest income, whether it is realized, unrealized, जो भी income होना तो it has to go to the profit and loss account. And hence ideally it would go to the P&L account. Are we clear with this? When I say ideally it should go to the P&L account, will this appear on the credit side of P&L or on the debit side of the P&L? Credit side because it is income. But institute says it should be appearing as a reduction from the debit side. Why? Because ideally, बराबर से logic समझे. Ideally, plan asset should appear on the asset side. Are they appearing on the asset side? No, they are appearing as a reduction from the liability. So any income from the plan asset, so plan asset is reducing the plan liability. By that same logic, income on the plan asset is reducing the expense that is created because of the plan liability. A part of the expense, वैसे तो खर्चा आपका 342 plus 3757 हो रहा है, but a part of this is financed by plan liability, plan assets. वैसे कि भाई ठीक है यार इतना खर्चा है, but out of that 350 is arranged. I've invested money and that 350 is meeting. I could have shown this separately, but at the end of the day, you are doing reporting. One of the core objectives of preparing annual reports is to present information in a manner that gives the best perspective to the reader. So, बोलने के लिए कोई बोल सकता है हाँ ये इधर इधर से देख लेंगे, but it's such a big annual report, you will get lost. So we try to present it in a manner that the reader is able to make better economic decisions. So ideally, where it should go to other income, instead of showing it as other income, we will say कि भाई ultimately asset is reduced from liability, so the income on the asset should reduce the expense that is created because of the liability. Moral of the story क्या है? उससे नहीं किससे? Expense which appears in the P&L, you should reduce it. So over here, from this, let us say you will subtract the return on the plan assets. By how much will you subtract? 350. Are we clear with this? But the institute does not stop over here. It says that ideally we should subtract 350. Ideally we should subtract 350. However, usually interest rate cycle is something like, for example, सबका हालत खराब है. So for example, let us say maybe a few years back, the bank FDs used to give you maybe 5% rate only, but around 8 to 10 years back, FDs used to give you 11 and 12% return also. अभी आप आज देखो 5 से 6, 7 तक पहुंच चुका है. If you look at FDs, they are generally giving you around 7, 7.5, sometimes even 8% type of returns. It is an interest rate cycle. It will go up, reach up to 8 or 10, then come down, go up to 4, again come back. It's a cycle. So, what the essence over here is, we say that these let us say funds that you have invested in your plan asset will give you a return. देखो, contribution is done at the end of the year. 3,500 is invested at the end of the year, so it is not invested. So it will not give you any return in the current year. It will start giving you return in the next year. But the 3,000 was invested at the start of the year. Current year may have earned 350 rupees. So maybe that is around approximately 11.5 to 12% return. 3,000 के ऊपर आप if you do 350 upon 3,000, that's around 11.5 to 12% return. But the actuary is saying that the rate of return, average rate of return on the government bond is 10%. जब भी हमने liability का calculation किया, we took the discounted at 10%. How did you calculate that? Well, actuary said, actuary looked at the longer picture. He said, by India में कभी कभार you will get 12%, कभी कभार you will get 8%. On an average, over the cycle, through the cycle, you will get around 10%. Are we getting this? And hence they said, chalo, let us say the expected return is 10%, which is usually the same as the discounted. It can be different as well, but usually it is the same. So it says, let us say the expected return on the plan assets, for example, is 10%. So ideally, you should have earned how much? 3,000 into 10%, that is 300. You earned how much? Which means how much extra you earned? Standard says that ye 50 is not your real income. I mean, it is income, but the standard believes that this 50 ye saal zyada mila, maybe in some other year you will earn only 250. On an average, you will earn around 300. I'll again repeat. The standard says that 300 is your expected return. 300 is your expected return. However, out of your actual return is 350. So 50 is the changes in return. In this year, it is a positive change. Because actually said on an average you will earn 10%, this year you earned 11.67%. But the interest rate cycle is such that भाई ये तो long term plan है. Companies के लिए 20-30 साल चलता है. So to say कि every year का return you take, no. Maybe some years you earn 11-12%, some years you earn 8 or 9%. So that 50 which is excess in the current year will probably be offset. It's like a super profit in this year will be offsetted by some other year as per a general interest rate cycle. तो जैसे वो 350 को भी तोड़ा जाए, out of the 350, 300 will be shown as expected return and the 50 will be shown as changes in return. The changes in return will be shown separately and expected return will be shown separately. So if a reader has that much caliber that he understands what is written, we are trying to do better financial reporting. We are trying to say, भाई 350 कमा है, but उसमें से real sustainable as you call it income is 300. 50 is volatile. आज ज्यादा मिला है, कल कम मिलेगा. And hence I want to segregate 350 and 300 separately. Still, if it is lesser than, let's say you earned actual return of 250 only, then 300 will still be expected return and negative 50 will be the changes in return. It will be like a loss. Are we clear with this? Yes, okay. So, अभी कोई option ही नहीं हाँ बोलने के लिए. So हमारे doubt ही क्या पूछे वो नहीं समझ में आ रहा. So over here. This is not, बहुत बार क्या अभी पहली बार आ रहा है. So there is no history on this, but institute has not given you any sum on this. They have given you some basic theory on this. नहीं क्यों कर रहे हो ऐसा नहीं, एग्जाम में कुछ भी आ सकता है. ऐसा नहीं होता कि थियरी दिया है. They have asked you sums. I mean, we'll do sums individually, but पूरा picture they have not asked you sums. I mean, we'll do sums where like plan liability they have done that one big sum. वैसे they have done a few sums, but करना जरूरी. Otherwise, if you read this ना रट्टा मारने वाला बात है. If you don't try to understand it, आपको कुछ समझ में नहीं आएगा. रट्टा मारने वाला ही बात है. So what we are trying to do is we are trying to explain to some extent, to the extent possible and to the extent digestible. Right? So ये digestible है. Honestly, this is digestible. So अब थोड़ा effort डालोगे आपको समझ में आएगा. So what will be your journal entry? Your journal entry will be plan assets account debit 350 to what? Plan assets account debit to expected return. This is 300. How did you calculate this? 3000 into 10% to changes in return. This is sometimes also called as actuarial gain or loss. Sir, यहाँ पे actuary कहाँ से बीच में आ गया? Because 10% is estimated by the actuary. Ideally your return should have been 3000 into 10%. That was based on an actuarial assumption. You earned 350. So that difference is the change as compared to what an actuary expected you should have earned. So that is changes in return, also called as actuarial gain or loss. So this is changes in return, also called as actuarial gain or loss to the extent of 50. At the end of it, sab jata kidhar hai? P&L. Where in the P&L? Reduction. So how will this appear at the end of the day? One can always say interest minus so interest on plan liabilities minus you can say interest on plan assets. Sir, what will I show over here? 300. So 42 is like my net interest, and then I will show changes in return. Acha, is it a cost for me or is it an income for me? So this will subtract it, and hence my net expense will be 42 plus 3757 minus 50, and this is 3749. This will be my net expense. वैसे my net expense was around 4099. It was appearing at 342 plus 3757. हमने बोला था 342 plus 3757. It should have been 4099. हम बोल रहे नहीं, out of that 4099, 350 is met out of the plan assets, and hence my net expense is 3749. Are we clear with this? Institute has one sum where they have asked you to calculate, one or two sums where they have asked you to calculate actual return, which is very easy, balancing figure. But if you have to find actuarial gain or loss, then you have to find the actual and the expected. The difference between actual and expected, 350 minus 350 rupees is the actuarial gain or loss or changes in return. Are we clear with this? But आप reporting कर रहे हो, whether you show provision for depreciation on the liability side or you show it as reduction from assets, ultimately balance sheet is going to tally. But you have to know how the reporting happens in a way reader understands it the best. Okay, you look at plan assets. look at plan assets. Let us read this. Acha, what are plan assets? These are assets. These are assets which are earmarked. What do you mean by earmarked? Dedicated. These are assets that is earmarked, dedicated investments which can be used primarily for settling defined benefit liabilities. They will be used for the purpose of settling the liabilities. These are assets like government bonds and include qualified insurance policies as well. The following need to be considered for plan assets. First, they should be measured at fair value. Second, they need to be deducted from the liability in order to show the deficit or the surplus. And third, the actual return and expected return, that is discount rate on the plan assets. The return is nothing but interest, dividend, realized gain or loss, unrealized gain or loss, minus expense or taxes. This is the total return. In our example 350, sab jod jad ke. Expected return is the long-term return on plan assets as predicted by the actuary. This rate should be taken as a discount rate for liabilities as well in general. This is into bracket unless given otherwise. If a separate rate is given, you will take that. But if separate rate is not given, expected return can be taken as discount rate. If a separate rate is given, you take that. Unless given otherwise. Okay, the actual return refers to the actual amount earned during the year. In our example, 350 rupees. The difference between the actual return and the expected return should be shown as changes in return, which would be shown in actual gains or losses into bracket P&L. Difference between the two, difference between 350 and 300. Alternatively, we can include the expected return, that is opening into discount rate, and take the changes in return as a balancing figure in the plan assets working. Sir, what does this mean? Rather than doing this, we can say 3000, include 300 over here, plus 3500 over here, no benefits paid, closing is 6800. So the balancing figure, that is 50 over here, will directly give you the changes in return. That is an alternative way to calculate. So there are two ways in which you can calculate the changes. Either you take the expected return in the working and then the balancing figure is the changes in return, or you take the actual return, calculate the expected return, difference between the two is the changes in return. The expected return would be shown as a reduction from interest expense in the P&L, whereas the changes in return will be shown, आगे आप लिखेंगे, as a separate line item. As a separate line item while calculating defined benefit expense. Okay. Acha, presentation on the balance sheet, the net deficit or surplus, that is liability minus asset, should be shown in the balance sheet subjected to an asset ceiling in case of surplus. Forget the asset ceiling part. Relevant nahi hai. So this is summary. Institute, if you look at an annual report, this is the heart. If you understand this summary properly, it means you have understood everything that has happened properly. So summary में क्या होता है? Plan liability. The opening plan liability, from where will this come? Actuarial valuation. Acha, to this you will add interest, double entry. Interest comes over here. Second effect of interest on liability will come over here. अरे बराबर का नहीं? Why would this change? Sir, current service cost. Current service cost comes over here. Second effect of current service cost will also come over here. Acha, next you have past service cost. Acha, यहाँ पे you will say full past service cost. The entire 10,227 will come over here. But यहाँ पे past service cost, vested or unvested, amortized. Write the words amortized over here. Amortized. 5113 for example. In case of unvested, for vested, entire 10,227. Acha. Next there is curtailment. Curtailment can mean reduction. We have not discussed a lot about curtailment, but that is the opposite of past service cost. So curtailment usually reduces the liability. Like past service cost, यहाँ पे less करेंगे curtailment. Past service cost increases, curtailment reduces, but curtailment will typically give us a gain. So this is less gain on curtailment. reduce past service cost. अच्छा, curtailment यानी liability debit. If liability debit, P&L credit, so that will reduce your expense. I don't show it as income, I show it as a reduction from my expense. अच्छा, then in my liability there are benefits paid. अच्छा, will the benefits paid impact the profit and loss account? No, the benefits paid will impact the plan assets and the plan liabilities on both sides. It will reduce my plan assets because I will use that to pay my plan liabilities. And then last, there is changes in actuarial assumptions. The balancing figure that we got, I think 4131 or so in the third year of our example. This is balancing figure. We said 10,000 as salary became 15,000, because of which the liability changed. Acha, one effect is increasing the liability. Second effect goes where? Changes in actuarial assumptions over here. Let us say this will come as an expense if it's a loss, income if it is a gain. That finally will give you the closing, which is coming from an actuary's certificate. Are we clear with this? Acha, but then there are plan assets as well. Well, plan assets opening fair value plus you will have interest. Acha, interest is like expected return. Where will this go? This is the 300 rupees less from the expense. Are we clear with this? Next, contribution. Well, contribution is not an expense, will not impact the liability, it will go against the company's bank account. Usual bank account will fall. Contribution, and if you are asked to prepare bank account, the second effect will be over there. And changes in return. अच्छा, यहाँ पे OCI cancel कर दे. Into bracket write down actuarial gain/loss. Actuarial gain/loss. Are we clear with this? So this is the balancing figure, and the second effect of that will come over here. Changes in return on plan assets. In our example, that is 50 rupees. So if I look at our example, in our example this was 300 less, this was 50 less. And changes in asset ceiling, for the time being you can skip. Already हमने बहुत complication करके रखा है. I mean, institute has not asked you anything, so I will not go into too much detail. Asset ceiling क्या होता है? It is something which is a maximum amount beyond which you cannot withdraw as a company, so your net asset cannot cross the asset ceiling. You can ignore that for the timing. So you'll have closing liability minus closing asset. Changes due to asset ceiling, for the timing you cancel this out. At least at C enter, I don't think institute should go into too much of this detailing. So asset ceiling you can kind of remove. Achha, but यहाँ पे there is also one more thing. Minus you will add unamortized past service cost, and that is the net amount that will appear in the balance sheet. So from the liability you subtract the asset, and then if there is any unamortized past service cost, that will come over here. अरे बराबर क्या नहीं? Perfect. Okay. The last two things are hardly anything. Other long-term benefits, the accounting for this plan is exactly the same as post-employment plan. Working is the same. It is that post-employment plans are payable at or after retirement. Other long-term benefits are payable during the service, maybe after 12 months, but before retirement, like a silver jubilee plan. As each year goes by, you will record current service cost. You are coming closer and closer, or you will record interest cost. अरे बराबर क्या नहीं? That is other long-term benefit, nothing different. And termination benefit, it's like retrenchment, VRS, etc. When you do income tax, वहाँ पे भी वो completed years का फंडा है. When you have VRS, also completed years or remaining months, वो सब बाकी है. But you can't accrue it each year because till the time the VRS plan or retrenchment plan is announced, there is no liability. Gratuity you can build using projected unit credit method. You might work for 10 years, gratuity builds each year. VRS over 10 years, there was no VRS scheme. You can't say कि भाई चलो VRS अपन each year पे record करेंगे. In the 10th year, if a VRS scheme comes, that is when you record an expense. And hence VRS is not clubbed with post-employment plans. In fact, it is shown separately because VRS is not payable to every employee. It is payable only when the scheme comes out and the employee accepts it. Gratuity ऐसा नहीं होता. Gratuity, pension, provident fund, etc. accrue as and when employee renders service because it is a part of their employment agreements. Are we clear with this? Okay. So you will have termination benefits, वो VRS है, VRS and retrenchment. These benefits can be recorded only once the obligation to terminate arises. That is VRS scheme announced and accepted. So once the VRS scheme is announced and accepted, that is when you can record it. Further, only that part of the benefit which is exclusively linked to termination can be recorded as termination benefits. If any part is linked to employee's future service, it should be recorded as service cost. It is only that part which is linked to the VRS termination that should be a part. But when should you record? When you announce that scheme and it gets accepted, not over the years. Are we clear with this? Acha. Now we'll go to the remaining questions. Okay, before you go to 7 and 8, which are a little tricky. 9 is done. Acha, then there are some, I've also included the same thing. With the study material, you can actually number it accordingly, but I've just tried to keep it consistent with the study material over here. So there will be some theoretical questions. So what are the types of employee benefits and what is the objective of introduction of this standard? There are 4 types of employee benefits: short term, post employment, termination, other long term. The objective over here is largely to match the expense as and when service is rendered, to manifest accounting using accrual method. So this is pure theory. Acha, next we have a couple of practical questions. Acha, before you go, I'll go to an easy question. This is question 8. This is from your practical section. If you actually want to have a serially numbered thing, illustration 9, this is theory. This is extra, can be skipped as well. You can just refer it. You will not get a theory question in my understanding. Practical question, you can call this as illustration 10. You can call this as illustration 11. If you are referring it against the study material, it is just behind your practice section होता है, उसमें question 8 है. This is illustration 11. And last में this is 9 के बदले illustration 12. And that's it. Chapter will get over. Chalo, let's go to the easiest of this. Let us go to illustration 11 or the institute practical question 8. काफी आसान है. Hopefully you should get this correct. Following data apply to X limit, its defined benefit pension plan for the year ended 31st March 20x2. Okay, calculate the actual return on plan assets. Only actual return. Not changes in return, not expected return. So you have benefits paid, employer contribution, fair market value on 31st March 20x2. Next page you have fair market value on 20x1. Can you guide me? How will you calculate actual return? Or can you calculate and tell me? And say this is illustration what? 11. Practical question 8. So over here what is happening? Well, you can try to make that plan asset working. In the plan asset working, you will take opening fair value on 31st March 20x1. How much is the opening fair value? 8 lakhs. Why should this go up? Technically by expected return, but I don't need to find the expected return over there. I just need to find the actual return directly. Aja. This will go up by 8 lakhs. Now, why should this go up further? Contribution. How much will be the contribution? Will that increase the plan asset or reduce? Increase. Why should it go down? Benefits paid. How much are the benefits paid? 2 lakhs. So, ideally, your closing should come to 8 lakh 80, but is your closing fair value actually 8 lakh 80? It is, which means why should the difference be 2 lakh 60? Because you must have earned an actual return. In this question, they have not asked you, but even if they had asked you, there is no way to calculate expected return because the percentage is not given. You can't find this. So your actual return will be 2,60,000. Straightforward. Acha, now question number 7, illustration 7. Institute has done a working and they have mentioned an alternative solution is possible. Question वैसे इतना tough नहीं है, but the time value of money adjustment makes it unnecessarily complicated because the question did not tell you that. Institute ने खुद से कैसा किया हुआ, and they have told you at the end कि by alternative solution is possible. We'll discuss के क्या कर सकते हैं. First the ICI solution and then what would have been the easier and ideally if nothing is given the more appropriate alternative solution in my opinion, if the question remains silent. Let us go to question 7. Mark it as important. In my opinion, whichever questions over here involve a numerical are more important. Chaliye. Let us read illustration number 7. As on 1st April 20x1, the fair value of plan assets was 1 lakh in respect of pension plan of, let's say, Zelius Limited. On 30th September 20x1, plan paid out benefits of 19,000 and received inward contribution of 49. When is this happening? 6 months later. So contributions and benefits are somewhere in the middle of the year. As on 31st March 20x2, that is at the end of the year, the fair value of the plan assets was 1,50,000. Okay, that's fine. And the present value of the defined benefit obligation was 147,920. Achha, what does this mean? Present value of defined benefit obligation was 147,920. Liability. Actuarial losses on obligations were 600. Obligations bole to liability or asset? Liability. So maybe that actuarial gain or loss due to changes in assumption is already calculated and given to you as 600. Achha, on 1st April 20x1, the company made the following estimates based on market studies, understanding and prevailing prices. So these are estimates. Interest and dividend income after tax is 9.25. Achha, is that a part of return? Yes. A realized and unrealized gain or loss after tax, is that also a part of return? Fund administrative cost, you are subtracting that. Should that also be subtracted? Yes, so basically 9.25 plus 2 minus 1 comes to 10.25. You are required to find the expected and the actual return on plan assets. Actual return should be easy, expected return will be a problem. So first let us try to find the actual return in a similar format. Can I say we can use a similar format actually? Achha, maybe the dates are different. So let us say this is illustration 11. You have the solution printed, so I am doing it directly. So over here, let us say this was illustration 7. What is the opening fair value on 1st April? 1 lakh. What are the contributions made? Now they are made during the year, so be it, but they are made. What are the benefits paid? And hence ideally your closing should be what? 1 lakh. But what is the closing fair value of the asset? Liability chhod de. Asset information is relevant, liability information is not. Which means the balancing figure is what? What is this called? So ये तो open and shut case हो गया. Actual return is 20,000. Now comes a problem. In illustration 7, you need to find expected return as well. So in this, how will you find the expected return? While calculating the expected return, what are the things that you need to be slightly careful about? So over here, on the opening balance, will you earn some return? Opening balance is how much? Is that deployed for the entire year? Yes. Into what rate? 10.25% per annum. And hence this is 1 lakh into 10.25%. This is 10,250. No problem in this. Achha, on the contributions of 49,000 and the benefits paid of 19,000, that is, both of them are happening on 30th September. So can I say for the company as a whole, I am receiving net 30,000 I'm paying 40, I'm receiving 49 and I'm paying 19. So net at the end of the day to invest, I will have 30,000. But will that 30,000 give me a return for the entire 12 months? No. So over here, on the net contributions received, this is 49 minus 19 comes to 30. What will you do? Will you take entire 10.5%? 10.25%? 10.25% into 6 by 12. So this comes to 30,000 into 10.25% into 6 by 12, 1537.5, and hence your expected return will be 11,787.5. This is your answer using alternative 1. In my opinion, this is the correct alternative. Institute ने ऐसा नहीं किया, but they have given you that alternative answer is possible. Here, layman, when he reads, this is the answer that they will take. Now, what has Institute implicitly assumed in its main solution, though they have mentioned that an alternative answer is possible. They have said कि भाई 10.25% है क्या? This is the per annum rate. But they have said that if this was half yearly compounded, do you understand half yearly compounding? A is equal to P into 1 plus R divided by 2 raised to 2. So if I am starting with 1 rupee and effectively I am earning a return of 10.25%, then after 1 year this will become 1.1025. 1 rupee plus 0.1025. But sir, compounding happens half yearly, so 1 by R plus 2 raised to 2. So if I divide this, therefore 1.1025 equals 1 plus R by 2 raised to 2. Achha, can I take square root on both sides? So over here 1.1025 square rooted. Therefore 1.05 equals 1 plus R by 2. Therefore if I take 1 on the other side, 0.05 equals R by 2. 1 I have taken on the other side. Therefore R equals what? 10%, 0.1, that is 10% per annum half yearly compounded. अब ये हमको कौन से सपने में आएगा? कोई बोलेगा you do quarterly compounding, कोई बोलेगा you do daily compounding, कोई बोलेगा you do monthly compounding. Is the question anywhere telling you half yearly compounding applies? So ideally this is baseless. Your entire syllabus, you have done capital budgeting. You assume annual compounding. When you do discounting, you do equal to 1 year wise. वो तो वहाँ पे भी आप half yearly compounding ले लो. नंबर कुछ और ही आएगा. 10% per annum annual compounded and 10% per annum half yearly compounded are not the same. 10% per annum annually compounded means 10% return. But 10% per annum half yearly compounded is effectively 10.25% return. But हमको कैसे समझ में आएगा क्वेश्चन देख के कि this is half yearly compounded? Had the question given you any hint that this 10.25% is half yearly compounded? Yes, we would have done this working based on our understanding of time value of money and come to this. Sir, but इससे क्या फर्क पड़ता है? अरे इससे फर्क ये पड़ेगा that for 1 lakh which is deployed, you have earned 5% return for the first 6 months, and again on that total amount 5%, that is effectively 10.25. But for that 30,000 earned 5% only. But ये तो भी बहुत ही I mean it's impossible to infer that unless you have seen the solution कि हाँ ऐसे करना है. So over here alternative 2, if half yearly compounding is assumed, now in my opinion that is impossible unless you see the question and you know कि भाई इंस्टीट्यूट ने ऐसा किया और आप एग्जाम में करो तो बात अलग है. Otherwise, how will you assume that? If half yearly compounding applies, acha, then we can say on the 1st April opening, we can still say, here 1 lakh into, you can say 10.25%. Or 10.25% is nothing but 1 plus 0.10 raised to divided by 2 raised to 2. ये समझा आपने को? 1.05 into equal to, so your answer will be the same, 10,250. However, for the investment on 30th September, this will be net 30,000 into, for example, 1 plus 0.10 divided by 2 raised to 1. This is into, or rather, I mean minus 1 karke jaise, so this is 0.05 or 5%. Sir, why are we doing both of them? Because it is my hunch. Final CA mein same sum, but there they have clearly mentioned it is half yearly compounded. My hunch is if this sum comes, they will write that sentence that it is 10% per annum half yearly compounded. So तभी आपका ये simplistic working नहीं चलेगा. But if they have not written, then in the study material they have clearly told you that alternatively you can solve without compounding. But if it comes in the exam with that sentence that half yearly compounding applies, then आप ये alternative solution नहीं डाल सकते हो. You have to solve this like this. तो अपने को आना दोनों चाहिए. If question remains silent, institute agrees that you can do this working. Easy working. 11,787. In fact, that is the more logical and correct working. But if the question tells you half yearly compounding, well, then you don't have a choice. Then you have to do this 30,000 into 5%, no compounding effect, 1,500 only, and this will be 11,750. फर्क छोटा सा है, but आपके मार्क्स में काफी आ सकता है, right? Okay, so this is called as expected return. Now the question remains silent. काम बढ़ाने का. The question remains silent if it had asked you कि sir calculate changes in return or actual gain or loss on the plan assets, then what will you compare? Sir, we will compare 20,000 with this 11,700 and something. The difference is the changes in return. मजा है? Okay. So over here, if you go to see, how has the institute solved? Well, if you see, यहाँ पे they have taken 11,750. That is our alternative 2. They have taken कि भाई this is 5% equivalent to 10.25% annually, but compounded 6 monthly. How do you assume that? In my opinion, you can't, unless a question tells you that. Expect return on plan assets, and then you have fair value of plan assets, and ये सब करते करते you will find actual return, which is 20,000. You can follow it in any format. Alternatively, this is ICI note, okay? ये मैंने नहीं डाला है. The above question may be solved without giving the compounding effect to the rate of return. In which case, this will be equal to our alternative 1. If you want, you can note that down. This is your alternative 1. And नीचे जो है कि भाई कैसे ICI has come to this 10% half yearly. Chalo, are we done? Acha, just write down a reference note over here. Write down a reference note. ICAI has given both alternatives. Full stop. However, in case a question specifically specifies half-yearly compounding, comma, then we will have to solve accordingly. Then we will have to solve accordingly. Write down an extra point as well. Extra. Changes in return into bracket actuarial gain bracket closed equals actual minus expected. Actual to 20,000 minus, I mean you can take 11,750 for example, or 11,787, whatever you are taking, whichever alternative. So if you are solving using alternative 2, I'm just trying to showcase के भाई खलूट के अगर पूछ लिया एग्जाम में to calculate even the changes in return, that additional point you should be aware. 8250. Are we clear with this? अच्छा, a question on exact similar lines. The last question which was there in your study material, I think illustration number 12, or practical question I think 9 or 10. We'll just try, and I want you to try. A similar question is there, I think. Just slight numbers are different. On page 187, illustration number 12. Okay, are we there? Now the fair value of plan assets of Anupam was 2 lakhs in respect of employee benefit plan on 1st April 20x1. On 30th September, the plan paid out benefits of 25,000 and received inward contribution of 55,000. On 31st March 20x2, the fair value of the plan asset was 3 lakhs. On 1st April 20x1, the company made the following estimates based on market studies and prevailing prices. Similar thing comes to 10.25. Calculate the expected and actual return on 31st March 20x2 as per year 15. Can I say this is exactly similar to illustration 7? It's more like a homework question. You want to practice this in rough right now. First calculate the actual return quickly. Rough में आप निकाले actual return. And then try to find the expected return using alternative 2, the institute वाला alternative, because वो सादा वाला तो you know how to calculate. Chalo, so are we done? Let us try to practice this once. Actual return is fairly easy. For actual return, you will again do that same working. I'm just doing this in rough. Let's say question number 12. You will start with 2 lakhs plus 55 minus 25. So your answer comes to 2 lakh 30. But your closing fair value is 3 lakhs, which means your actual return is. Is everyone clear? देखो ऐसा आएगा तो स्कोरिंग अपने लिए. इतना पढ़ाई किया, we studied so hard, and if this comes, चलेगा. So over here, so this is actual return 70,000. Okay. Next you want to find the expected return. Again we can say 10.25%. 10.25% per annum is nothing but 10% half yearly compounded. That means you will take 2 lakhs into 10.25%. Comes to 20,000, 20,500, and then this is 30,000 into 5%, comes to 1,500, comes to 22,000. बराबर ना? So over here half yearly is okay. I mean this is 5 is 10% into 6 by 12, half yearly compounded. So over here this will come to 22,000 in case half yearly compounding is expressly asked. If not, alternatively you can directly do. Alternatively, if you want, you can say 30,000 into 10.25% into 6 by 12. A slightly different answer. Are we clear with this? Yes, okay, so that takes care of this question as well. Now we have two questions, to some extent theory driven and a bit of numerical as well. In the क्या हो गया, कोई doubt? In the first question there is a settlement allowance. Now it's a theory, case based question, okay? This settlement allowance is paid, please pay attention. The settlement allowance is agreed to be paid as it's like leave travel allowance type of a thing, that okay, when you leave the company, as a good gesture I have a policy to pay for your trip based on your eligibility. Like if you are a manager you will get economy class, if you are a clerk you will probably get sleeper railway class or whatever it is. So I will pay for your trip, and if you are of the type of the person जिसको travel पसंद नहीं है, then I will pay 1 month of your last drawn salary. अभी उसके लिए you work 3 years, you work 5 years, you work 15 years, you work 2 years, it does not matter. Whenever you join and you leave, as a sign of gratitude we will pay you either 1 month of your last drawn salary, or if you like to travel we will cover your travel expenses. Are we getting this? But when will we pay this? When you retire. Retire means when you leave the company. फिर आप किधर और जाते हो नहीं जाते हो, secondary. Retirement and superannuation are two different things. Superannuation means you turn 60 and you automatically retire. Retirement on the other hand means leaving the company. Whether you superannuate or not, it does not matter. So is this also an employee benefit? Think and tell me, is this also an employee benefit? Is it? Yes? I mean employee benefit का कोई exhaustive list नहीं है. Any benefit which is providing a benefit to the employee will be covered by employee benefit. अच्छा, are these employee benefits covered by AS 15? So will this settlement allowance also be covered by AS 15? Will this be covered? Yes. अच्छा, but then this is what? Is it short term? Is it post employment, other long term, or termination? Why post employment? It's payable at retirement. How is a post employment plan defined? A post employment plan is defined as a plan which results in payment at or after retirement. अच्छा, यहाँ पे theory में the company will make two arguments in front of you and you have to tell me whether the company's arguments are correct or not. The company will say, I don't know how many employees will claim travel. I don't know how many employees will demand 1 month of last pay drawn. So I am unable to estimate, and as a result I don't want to show. I will show it on claim basis. Claim basis is cash basis. Is that contention permitted? No. If you are unable to estimate, get an actuary on board and take his assumptions. But वैसे तो gratuity pension के लिए वो बोल दो. AS 15 came as a first instant because it is difficult to estimate, undoubtedly yes. But that does not mean you cannot estimate. You can still estimate. Are we clear with this? So you will estimate, and you should estimate rather over here. That is point number 1. Second is, they are saying कि देखो, this is post employment benefit, but in post employment, listen to this, post employment benefit projected unit credit method applies. That is, as each year of service is given, one unit of benefit is accruing. यहाँ पे तो ऐसा कुछ है ही नहीं. Whether you give 15 years of service, you give 15 months of service, you give 20 months of service, it does not matter. You are going to get 1 month of last pay drawn, not into completed years of service, or you are going to get entitlement based on the leave travel, leave policy के हिसाब से. So then what is the point of applying AS 15? Because यहाँ पे it is not linked to the number of years served. Is that contention correct? Is that contention correct? Can you still apply the actuarial valuation method of AS 15 to this plan, or you can say कि भाई ठीक है, if the number of years of service are not there, we will record it directly only. We have to follow? Yes. Actuarial valuation is a must. The standard does not tell you that post-employment plans are those plans where the benefit accrues because of each year of service. Post-employment plans are those plans which are payable at or after retirement. whether the benefit accrues due to each year of service or due to 1 year of service, that does not matter. Sir, तो यहाँ पे working कैसे होगा? Institute has not asked you anything, but हम थोड़ा काम बढ़ा रहे हैं आपका. So for example, if you have 100 employees, you will try, the actuary will go and he will estimate, for example, 50% he will say will claim the actual travel expense, and 50% will demand the last drawn salary. अरे बराबर क्या नहीं? Actuary will have to estimate what the expense would be on that travel. For example, he believes that, for example, on this travel, he believes that they will spend 10,000 rupees when they actually travel. And if people are demanding last drawn salary, the last drawn salary at that point on an average would be 8,000. Are we getting this? Acha, so this is regarding the last drawn salary and this. So over here, then you will also estimate the average term after which the employee will retire. For example, I am saying 5 years is the average term. So what will happen? Let us say for simplicity भी 100 के बदले 2 employee ले लेते, तो it is easier. So one employee you believe will travel and he will ask 10,000 from you. Other employee will ask 8,000 from you. So when does the benefit accrue? So the benefit accrues in the first year of service only. In the first year only. Now even if you resign in the next year, you will get this benefit. So over here, the benefit attributable to the current year service, benefit attributable is entire 10,000 into one employee plus 8,000 into one. अभी आप 2 साल काम करो, 4 साल काम करो, 50 साल काम करो. The number of years service don't matter. The moment you give the first year of service, you are entitled. And as a result, this will come to 18,000 for example. But this 18,000 is payable when?
At the retirement.
So let us say the discount factor over here is 10%. Let's say 1 year served, 4 years remaining. I still will have to record current service cost account debit to provision. So over here, this is 18,000 for example into 0.683. 18,000 into 0.683 comes to what? 12,294. 12,294. Acha, this is year 1. In year 2, will there be any further current service cost? Does the second year of service give rise to any additional unit of entitlement? No, but is there passage of time? So is there interest cost? Yes, this is 12,294 into 10%. This is 1229. Debit to provision. For example, 1229. ऐसे करते 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 slowly over a period of 4 years, you will come up to 18,000. In fact, it is very much possible that in the second, third or fourth year, you might decide, or the actuaries might decide कि नहीं boss, इसका last drawn salary will not be 8,000, it will become 12,000, and this traveling cost is now skyrocketing, it will become 15,000. So actuarial gain or loss will also come. So to believe कि भाई post employment का working will be done only if it is attributable to each year of service is wrong. ऐसा standard किधर भी नहीं बोलता है. Standard says that if the benefit is payable at or after retirement, you have to do the working for post employment plans. अरे बराबर क्या नहीं? You don't have to link it to the fact that the benefit is attributable to each year of service. So in this case, they will put 2 contentions. कि भाई it is difficult to estimate. We'll say so what? Get an actuary. Or they will come and say कि भाई even if I show it as post-employment plans, the benefit is not attributable to each year of service. We say it does not really matter. Even if it is not attributable to each year of service, still you have to do the actuarial valuation and expense over the tenure rather than weighting it on a claim basis. Claim basis when the entire employee retires and claims sabhi record karenge, we will say no, that is wrong. Are we clear with this? Chalo. So let us review this question over here. Practical questions में question 1 or illustration number 10. So let us review this once. It's a theory case, pure theory case. A company has a scheme for payment of settlement allowance. This is page number 186. I think this must be 0.7, practical question 7 if I'm not wrong. छोड़ो जो भी है. So over here, illustration 10, a company has a scheme for payment of settlement allowance to retiring employees. Scheme for payment of settlement allowance to retiring employees. Okay. Under the scheme, देखो यहाँ पे क्या लिखा है, to retiring employees. What does it mean if you are paying it to retiring employees? It's a post-employment plan. Under the scheme, retiring employees are entitled to reimbursement of certain travel expenses for the class they are entitled to as per the company rule. Like reimbursement, if you are, let us say, manager category, you might get third AC reimbursement. Yes. And to a lump sum payment to cover expenses on food and stay during travel. Leave travel concession जिसको अपन बोलते हैं. Alternatively, employees can claim a lump sum amount equal to 1 month pay last drawn. It is similar to the example that we just discussed. अरे बराबर क्या है? अच्छा. The company's contentions in this matter are: first, the settlement allowance does not depend on the length of service. It is restricted to the employee's eligibility under the travel rule of the company or where the option for lump sum payment is exercised equal to the last pay drawn. So what are we saying? We are saying that settlement does not depend on the length of service. We say, so what? If it is not dependent on the length of service, the only implication over here is current service cost will be recorded once and that's it. It will not be recorded in the future years of service. But that does not mean accounting is not to be done using projected unit credit method. Second, since it is not related to the length of service, it is accounted for on a claim basis. Claim means when the employee claims, that is when he retires, that is when, is that correct? No. State whether the contentions of the company are correct as per the relevant accounting standard. Give reasons in support of your answer. Is the contentions of the company correct? Not correct. Length of service does not matter. Institute again has given a fairly detailed answer. We can just review that once. The present case falls under the category of defined benefit scheme under some para of AS 15. The said para encompasses case where payment promised to be made to the employee at or near retirement presents significant difficulties in determination of periodic charge to the statement of P&L. So there is some difficulties, but so what? The contention of the company that the settlement allowance will be accounted for on a claim basis is not correct even if the company's obligation under the scheme is uncertain and requires estimation. Let it require estimation. If you are not capable of doing that, get the service of an actuary. In estimating this obligation, assumptions may be needed to be made regarding future conditions which are largely outside the company's control. Thus, settlement allowance payable by the company is a defined retirement benefit covered by AS 15. A provision should be made every year in the accounts for accruing the liability on account of settlement allowance. Like first year 12,000 ka, फिर 12,000 plus 1229. The amount of provision should be calculated according to actuarial valuation. Where, however, the amount of provision so determined is not material, the company can follow some other method. If it is not material, but unless given otherwise, we will always assume it is material. Yes, okay. So we will just write a summary note over here somewhere. Write down. For question 7, we'll write a summary note somewhere. Company contention is wrong. Full stop. As per AS 15, as per AS 15, comma, we should follow actuarial valuation for post-employment plan. For post-employment plan into bracket settlement allowance, bracket closed, irrespective of it not, irrespective of it not being linked to length of service, irrespective of it not being linked to the length of service. Easy? Okay, and then we go to the last question over here. Go to illustration 8, mark it as important. Yes, please. That is wrong, no?
So the length of service could you follow that?
So they are saying, so they are just, this is a contention that it does not depend on the length of service and that's it. They are not telling you what accounting they are following. Second point is telling that based on that what accounting is followed. So point 2 is a continuation of point 1. They are not two mutually exclusive points. Okay, we'll go to question number 8. Rockstar Limited discontinues a business segment. Okay, under the agreement with the employees union, the employees of the discontinued segment will earn no further benefit. So you have discontinued a segment, maybe you keep these employees, you fire these employees, we don't know. But we have said that you will get no further benefit. So is that a curtailment of their plan? Yes, ideally, even if they continue to work, they will not get any further benefit. This is a curtailment without settlement. Acha, what does this mean here? Curtailment means reduction, that is fine. What does settlement mean? Yes, words are समझ में नहीं आते. What does settlement mean? It means in your tax, have you heard about commuted pension?
Yes.
Commutation of pension. What is commutation of pension? कि भाई instead of paying pension each month or each year, you pay a lump sum payment. Curtailment and settlement means I am curtailing your benefits and paying you immediately. Curtailment without settlement means I am curtailing your benefit. I am not paying you now. I will pay you when you retire. So this is curtailment without a settlement. That's it. It is curtailment at the end of the day. Because employees will continue to receive benefits for services rendered before discontinuance of the business segment. Okay. Curtailment reduces the gross obligation for various reasons. What is gross obligation? It means liabilities. ये language ही समझना भारी है. They are just explaining you. Curtailment reduces the gross obligation for various reasons, including changes in actuarial assumptions made before curtailment. Okay. So what are they saying? They are saying that because of curtailment, your liability will fall. कोई बोलता है why should it fall? They are still continuing to get benefit based on. No, we thought that benefit will be paid when the employee retires based on that last drawn salary. We thought 15,000, but now we are saying that no. Future service is not going to be entitled, which means the salary now is going to be counted, but salary now is not 15,000. Salary now is hardly 8,000. So maybe due to that or whatever be the reasons, we don't know. Curtailment results in reduction. Okay, if the benefits are determined based on the last pay drawn by the employees, the gross obligation reduces after curtailment because the last pay earlier assumed is no longer valid. I thought that the employee will continue for 5 years and when he retires his benefit will be based on 15,000 of last drawn salary. 2 साल बाद plan is curtailed. But if it is curtailed and it is going to be ultimately settled based on the salary now, salary today is hardly around 9 or 10,000. So that is the reason why liability may reduce, that's it. Now Rockstar estimates that the share of unamortized service cost that relates to the part of the obligation is rupees 18. Vapas. Rockstar estimates that the share of unamortized service cost that relates to the part of the obligation is 18, that is 10% of 180. Now, is Rockstar discontinuing all or it is discontinuing only a part of the segment? Part, that is, so we are saying कि भाई कंपनी के पास तो 1000 एम्प्लॉय हो गए, curtailment is not affecting all the 1,000 employees, it is affecting only part, maybe 10%. So 100 employees. So we are saying that there may be unamortized past service cost. That unamortized past service cost may be, for example, worth 180 for all employees, but to the employees whose plan is curtailed, the attribution is only 18. It is not the entire 180. Are we understanding what is happening actually? Acha, calculate the gain from curtailment and the liability after curtailment to be recognized in the balance sheet of Rockstar on the basis of the given information. You have to find the gain on account of the curtailment as well as the liability to be recorded post curtailment. So immediately before curtailment, the gross obligation. What do you mean by gross obligation? Asset or liability? Liability. Gross means before deducting plan assets. Gross obligation is estimated at 6,000 based on current actuarial assumption. The fair value of plan assets on that date is assumed to be 5,100. You guys tell me, if there is no settlement hota, so I will have to sell the plan assets and pay. But if there is no settlement, will the plan assets change? Let there be curtailment of plan. मैंने तो यार government bond में invest करके रखा है. If my government bond was worth 5,100, it is still going to be worth 5,100. So basically, unless given otherwise, there will be no change in the fair value after curtailment. Curtailment will affect the liability. Unless there is a settlement, it will not affect the asset. अरे कुछ समझ में आ रहा है? And the unamortized past service cost is 180. They have told you, but is the 180 entirely attributable to your curtailed plan? No. 180 is for entire. For you, it is only 18 rupees. Gain from curtailment is estimated as under. They have done some working. नहीं, ये तो solution आ गया. रुक जाए, यहाँ पे solution लिख दो. We will do it in a slightly more detailed manner so you understand what is happening. ठीक है? अच्छा. So let us try to see what is happening before curtailment, what will happen after curtailment, and then try to visualize the journal entry and find the gain on curtailment. Instead of done this directly, we will do it slightly longer. This is question number what? 8. So you will say presentation. Over here before curtailment. And you can say, let's say if you are doing this in a columnar form, after curtailment. Are you understanding what is happening? ये केस में after curtailment. अच्छा, presentation in balance sheet. अच्छा, in your balance sheet, what is the format for presentation? How do you start with? Gross obligation, also called as liability. अच्छा, what do you do next? Gross obligation minus what? Plan asset. अच्छा, at what value is this?
51.
Fair value. अरे बराबर क्या नहीं? अच्छा, this should ideally give me my net deficit or surplus. Is there anything else I need to adjust? Yes. This is unamortized past service cost, and that will give me, so this is, let us say, deficit, and this will give me net amount shown in balance sheet. अच्छा, क्वेश्चन बराबर से पढ़ गए. स्टार्टिंग में they've given you a lot of ज्ञान. Your true question, in my opinion, starts somewhere over here. यहाँ से. Just a second. Are we clear till here? Yes, अच्छा, just a second. उसके ऊपर तो they've just given you. This is just theory. Even if this entire part was not given, by and large, your solution will not be altered. I would say over here is the main. Rockstar estimates that the unamortized past service cost that relates to the part of obligation at 18. That is 10% of 180. Calculate the gain on curtailment after curtailment to be recognized in the balance sheet based on the given information. So immediately before curtailment, the gross obligation is estimated at 6,000 based on current actuarial assumptions. So what will we write down over here? 6,000. Can I say this is the value of the liability before curtailment? Acha, second point tells us the fair value of assets on the date is estimated at 5,100, but it does not tell you after curtailment क्या होएगा. What do you logically think? Will the value change after curtailment? No, but will the liabilities value change after curtailment? But the question does not expressly tell you by how much will it change. You might have to infer कि भाई कितने से change होगा. We will see that. So this net deficit is 900 कि भाई 6,000 का liability है and 5,100 का plan asset है. So net deficit is 900. This is a net credit balance. अच्छा, is there an unamortized past service cost? अच्छा, usually does unamortized past service cost have a debit balance or a credit balance? Debit. So 900 को add करेंगे, less करेंगे. Very nice. This is subtracted. Your journal entry must be past service cost account debit, unamortized past service cost account debit to liability, and hence your amount, net amount appearing in the balance sheet must be 720. Are we clear with this? Now comes the tricky part. After curtailment, will your liability change? That first paragraph gives you so much theory, it does not give you number, but it tells you that curtailment will result in the change in the value of gross obligation. But it does not tell you that how much is the gross obligation changing. What is a reasonable assumption to make? By how much will it change?
10%.
How did you find 10%? Well, if the unamortized past service cost, which is attributable, is 10%, then the liability reduction should also be 10%. If you read this language, देखो क्या बोल रहा है? Estimates that the share of unamortized cost that relates to the part of obligation is 18. That is 10% of this. So can we say कि भाई, if the unamortized cost which is attributable to the part curtailed is 10%, then the obligation which is curtailed is also 10%. And hence, how much will the liability after curtailment appear at? 5,400. 6,000 minus 10% of 6,000. समझ में आया? So what is this liability appearing at? 5,400. अच्छा, will that result in any change in the plan asset? So this is still 5,100. So if I subtract this will be 300. But what do you guys think? Will my unamortized past service cost also change?
Yes.
अच्छा, remaining unamortized past service cost will be how much? 180, 18 or 162?
160.
देखो 180 was there, out of which 10% is attributable to an obligation which is no longer there. So that unamortized past service cost should also no longer be there. So this is 162. And hence your answer comes to what? 138. Now the question asks you to find the gain or loss on curtailment. You can calculate it as a statement or you can pass journal entry. In my opinion, generally journal entry is better. Achha, liability is reducing. Because of this transaction, liability is reducing. It is reducing by how much? 600. So if liability is reducing, will you debit the liability or credit the liability? Gross obligation into bracket liability account debit. How much will you debit it by? Achha, is the plan asset changing? No. So will that go in the journal entry? No. Now comes a problem. Is the past service cost changing? By 18? Yeah, but liability is a credit balance. If I have to reduce it, I have to debit it. But unamortized past service cost usually has which balance? So if I have to reduce it, what do I do? Credit. So this is 2 unamortized past service cost. I will credit it by how much? 18. Which means If there's nothing else, the difference between the two is 582. What will you call this? Gain on curtailment. You curtailed, and due to the which will go to the P&L, you curtailed, and due to the curtailment your liability fell by 600. You have to pay 600 less. That is your gain. But unamortized cost, past service cost, which you had to amortize, got expensed off. 18 got expensed off, and as a result 600 का gain गया, 18 का expense आया, net 582 is the gain. So I mean, what the institute has done over here is they have not passed an entry, they have done it directly, but इसको समझना मुश्किल पड़ता है. So we have done a slightly longer version. We have said reduction of the liability is 600. Sir, कहाँ से आया? Well, 6000 into 10%. If nothing is given, we are assuming that if 10% is the attribution, then 10% must be the reduction in the liability. Less proportion of unamortized past service cost 18, that is 582. Now, students are unable to figure out why is 18 subtracted, and that is why मैंने journal entry मारा कि भाई liability is reduced, so liability is debited, but unamortized past service cost, which is a debit balance, if that has to reduce, it has to credit, and hence I have credited, and hence the net gain. Sir, how is it gain? लोगों को वो भी नहीं समझ, अरे credit balance आ रहा है. In the journal entry, it is coming on the credit, so it is a gain. The liability to be recognized after curtailment would be 5,400 less 5,100, that is 3,000 minus 162, and we have got 138. As you can see over here, ये हमारा 138 आ रहा है. Are we clear with this? Yes. Okay. Just write down a couple of notes over here for your reference. Note 1. It appears that the part of obligation curtailed, it appears that the part of obligation curtailed is 10%, and hence we take 600 as a reduction. Point 2. Curtailment does not reduce the plan assets. Point 3. Unamortized past service cost, unamortized PSC, has a debit balance and if it needs to be reduced, we need to credit it. Are we clear with this? Do you need a separate note on unamortized past service cost expensing, or it is understandable? Understandable how past service cost works. If it is vested, you take it to P&L immediately. So if you want, you can just put a small reference, not for this question, it is in general. So when I look at past service cost, you have to see whether it is amortized or vested or non-vested. If it is vested, your journal entry will be PSC account debit, which directly goes to the P&L, to liability. But if it is unvested or non-vested, your journal entry will be PSC account debit. This will be the amortized. PSC will go to the P&L. This is the amortized part. अभी amortized कितना होगा? Well, if it is 3 years, then 1/3. 4 years 1/4, 2 years 1/2. This will be the amortized part. Unamortized past service cost account debit. this you will ultimately deduct from liability ultimately. Ideally it's an asset, it has a debit balance, should appear as asset to liability. Are we clear with this? Yes? So this by and large takes care of AS15. There was a small theory chart which was there. I would not put a lot of weight behind this, but I'll just quickly discuss this so as to bring a logical closure. There are 4 types of plans. It's pure theory. I don't really put a lot of weight behind this, but nevertheless there are 4 types of plans over here. There is state plan, multi-employer plan, group plans and insured plans. What do you mean by state plans? These are run by the government of India. And if they are run by the government, typically employers' contribution is the only thing. Like statutory provident fund, once the employer contributes, we don't have to care as much. Are we clear with this? These are usually defined contribution plans. These are usually defined contribution. Multi-employer plans क्या होता है? Mutual funds. Mutual funds have plans where they take contribution from various employers. Like mutual funds takes from various individuals, they take from various employers and then invest. Now whether it is defined contribution or benefit depends on the terms and conditions of the plan. So if the risk is ultimately borne by the fund, then it is a defined contribution plan. If it is borne by the employers, it is defined benefit. If you are unable to figure out, you take it as defined contribution. Over here standard gives you a guidance, you can take it as defined contribution if you are unable to figure out. What do you mean by group plans? Group plans are plans which are managed by the group. Like Tata Group has 50 companies. हर एक कंपनी का अलग प्लान क्या बनाने का? They have a common company which says Tata Group plan, where every company will contribute. But again, the risk remains with each company, because if Tata Group does not have enough money to pay, the individual companies like Tata Motors, Tata Steel, etc. still have to pay. So this is usually defined benefit. Even study mat mein hai nahi, so you don't have to bother so much. And insured plans are usually very popular in India, where you go to the insurance company and you say you only handle everything, and you tell the employee that by insurance company will pay you the annuity or pension. In which case, if insurance company is going to pay you everything, then it is like a defined contribution plan. You pay premium to the insurance company and end of story. Are we getting this? So it is usually defined contribution. So it is just theory on whether these types of plans are defined contribution or benefit. So usually state plan and insurance plans are defined contribution, whereas multi-employer plans and group plans, you need to look at the terms, but if the terms don't pass on the risk, or if the risk still remains with the individual companies, then they are defined benefit plans. Yes, to aid our understanding, we'll just try to look at these MCQs and see if we are able to tackle them. Aja, just focus on the screen. Gratuity and pension would be examples of what? Post-employment. They are at or after retirement. This is the easiest MCQ. Right, okay. Non-accumulating. Non-accumulating means you cannot carry forward. Compensated absence is commonly referred to as, well, this is theory, we have not really done that. Is it earned leave, sick leave, casual leave, or all of the above? So over here, if you go to see क्या है, point C बोल के रखा हुआ है, this is casual leave. Casual leave cannot be carried forward. It is casual. तो आपको लेना है तो आप लो, नहीं लेना तो डूब जाएगा. So that is casual leave. This is again a pure theory part. Does not have accounting involved. The plans that are established by legislation to cover all enterprises and operated by the government, जैसे जो हमने अभी discuss किया, state plan. The best estimates of the variable to determine eventual cost of the best estimates to determine the variable to determine eventual cost of post-employment plans are referred to as actuarial assumptions that are given by the actuary. Actuarial or gains or losses should be recognized through the reserves, charged over the expected life of the employees, charged immediately to the P&L or not charged to the P&L? Immediately charged to the P&L. So we are performing fairly well. Yes. So did we enjoy this standard? Yes. So that's a fairly tricky one. I think that should be it for AS15. I hope you liked and enjoyed the new edition that Institute has brought for you.